Good morning, everybody. Man, that was some news, wasn't it? Did you guys see the way that market reacted? Holy cow, that was pretty amazing. The great thing is we knew that it was going to happen. Good morning, Andy. Good morning, Cav. It didn't sneak up on us. It didn't jump out of the bushes. We didn't need a fax or a telegram to let us know that news was happening. All we had to do was go to forexfactory.com/calendar and say, you know what, there's a lot of red. The market may go crazy. Muser, you got your answer, right? What happens when red news hits? Things go crazy. Good morning. Or at least have the potential to. So, guys, that's when I went and made some eggs. I was like, hey, I'll have breakfast. I won't jump in the middle of that. And it kept me out of a lot of problems. And then, spilled your popcorn on that roller coaster. Um, you guys want to know what a bummer is? Is right when it started slowing down, I took a long trade and I was up about $600 and my stops and targets wouldn't move. And I had to scramble to trade evade. And by the time I got out of it, I was only up about 150. That was pretty depressing, but is what it is. I check news every morning. Good morning, Miss Jen. And I just make sure that I don't jump in the middle of that emotional. Hey, what's up, Algo? Um, and that's kind of my deal. Every morning I do this, guys. Every morning I check it. It's what I do. And then everything that I talk about each and every day, guys, comes from the education page. I don't mess around. I don't go, hey, you know what? Let's give them a little and not give them the rest. Everything you need is right in the tutorial section, guys. Everything that you need. Good morning, Morgan. About using NinjaTrader is right here in the software user guide. We try to give you access 100%, not only to me 15 hours every week live to give you feedback, but also these are called instructions. And there's a lot of great stuff in there. But we're going to keep it simple this morning, guys. Whoa, where'd my picture go? Trade of 8. That is my data provider through Apex. So there is, guys, if you use these funding accounts, they have a backup system in place where you can, if something goes wrong with NinjaTrader, you can manage your trades from over there. I made the rookie mistake of not having it up. So I had to go in, log in, and by the time I got for funded or evaluation accounts, user. If you sign up with that funding company, you can get TradeAvate. Once you get TradeAvate, it gives you access to the TradeAvate website where you can manage your trades if something happens with your platform. They've got tons of Q&A FAQs over on the site that'll help you with that. Or I'm happy to help you with it as well, but not just yet. Guys, we're going to talk about 3 rules this morning. We're going to talk about the 3 rules for a high probability trend trade. We're going to talk about 3 rules. Each rule individually provides an advantage. And for the brand new users, your highest chance of success comes from this high probability trend trade. Your highest chance of winning more than you lose initially comes from this high probability trend trade. This high probability trend trade will also teach you to become a chart reader. And when you become a chart reader, you're going to understand with some pretty cool clarity where the market is likely to go. You're going to understand where it's likely to continue. You're also going to understand where it's likely to stop. And you're going to take these 3 things and you're going to piece them together. And you're going to use your chart reading every day to really just take advantage of what the market provides. So the rules for the high probability trend trade, there's only 3. I believe in simplicity for new users. I believe that if you focus on doing one thing really well, it will open doors. You will begin to see more and more. These 3 rules give you the advantage of momentum, the advantage of a clear path, and the advantage of an entry area, getting in where the market is most likely to continue. Momentum and a clear path, guys, once you master these 2, and I'm talking like a week to do it, once you master these 2, your entry areas are going to change all over the place. You are going to find ways to take advantage of momentum and a clear path, and you're going to see all the opportunities that are in fact available. These 3 rules come to be on 2 charts. That's it. Good morning, JW. 2 charts. That's all you need, new users. You need a large chart, which is a broad stroke of a brush. It's a very slow moving chart. You'll actually get everything that you need from the most current bar on the large chart. It will define the direction of the market. If the background is green, it's going up, guys. It's easiest to go up with it. If the background is red, it's going down. And you'll find that the path of least resistance is going with the direction of the market. Hey, good morning, Coke. It will define the momentum of the market and let you know if you have that advantage. It'll also define the areas. It'll let you know if you've reached a problematic area, if you've reached an area that may stop the market, that may really just spoil your good time, to be honest with you. So these two charts, the big chart, your let me get all my information to look for an entry chart, is really what the large crowd, the people that move the market, want to have happen, guys. And usually the easiest thing to do is just go with the large crowd. They are the proverbial lazy river flowing through the park, and there's a pina colada every 100 yards. So just go with the flow. And then there's a small chart, guys. This is the small crowd, the people that really don't have the giddy up to make this happen. And this is where rule number 3 will be met. We'll rely on that small crowd to fight everything the large crowd is doing. And by using a small chart for entries and a large chart to lead the way, to let you know that it's time to look for an entry, what happens is you can take one bar on the large chart, that most current bar, giving you all of that awesome information, and we're going to break it down on a smaller, faster chart, 15 to 30 bars. You're going to see the up and the down. You're going to see all the fluctuations that you don't see in this one bar. Good morning, Mr. Flowers. And you're going to be able to pinpoint precisely where the market is most likely to continue, guys. You're going to be able to call your shots. You're going to be able to say to yourself, man, with the advantage of momentum through rule number 1, with the advantage of a clear path through rule number 2, I'm going to pinpoint where the market is most likely to continue through rule number 3. So 3 rules, 2 charts, 3 advantages. Become a chart reader, guys. Give yourself about 20 days to just get comfortable with the information that you're looking at. And what you're going to find is that a lot of opportunity beyond this high probability trade presents itself. The quickest way to get to where you want to be. I've been keeping this secret for years, but I'm going to share it with you guys today. The step-by-step path to becoming a confident trader ASAP begins with you guys posting your trades in the class. Let me just give you a little insight on my experience. I was terrified to post in the room when I was a student rather than a teacher. I was afraid that the people around me would think I wasn't smart. I was afraid that I would make a mistake. I was afraid that my trades weren't right, and that everybody was going to find out where I lived, meet me in the supermarket, and ridicule me right in front of the produce section because I posted a trade with a challenge on it. It turns out that's not true. It turns out that when you post in the room, you're going to get feedback on everything that you see. So you're going to tell me everything that you see, and we're going to work together to become chart readers. I'm going to make sure that your reads are correct, because one of the things that happens with new users is they let that fear cripple them and keep them out of the room, and they begin to trade half-truths. And man, Kokofi, I'm telling you right now, I'm the warmest, fuzziest Novak in the group. And what you're going to find, guys, is that if you post a read in the room and you say, I had momentum, it is dangerous for ridicule. If you say, I had momentum, but I look at your chart and I say, hey, I noticed that it wasn't the best momentum. I noticed that there was a challenge here. Let's talk about the chart read. Let's clarify. Let's get you where you want to be. What happens is you get that instant feedback, that instant lesson. It's like a private session. And guys, everything that I do is to push you towards your success rather than say, oh man, Kokofi, you screwed this one up. What the hell were you thinking? So you have to show me what you saw. You have to tell me what you saw. Show me where you got in and tell me where you got out. And all we're going to do, guys, is we're going to walk hand in hand together and get you exactly where you want to be as a confident trader ASAP. The next thing is use the spreadsheet that Nexgen gives you. It's the same spreadsheet that I drop in this room every day, guys. I share mine because every day I add to it. Here is my spreadsheet. I just dropped it in the chat room. Download it. This spreadsheet has 4 tabs on it. The first tab is your trade journal. And the trade journal is where you're going to post everything that you do, guys. Win, lose, or draw. It doesn't matter if you're on simulator and you lose a trade. It doesn't matter. It's just a learning experience, guys. It's like failing a test in college. They don't kick you out of college. They give you a study guide so that you can pass the final, and that's exactly what we're doing. So you're going to post everything that you do into the spreadsheet, and every morning I want you waking up and going through yesterday's trades and saying to yourself, what worked? Usually momentum and a clear path in an entry area works. And what didn't work? Well, maybe I traded without momentum, or maybe I traded in determination conditions. And you'll find that what works feels pretty mellow, guys. You're relaxed, your palms don't sweat, no butterflies in your stomach. And when you know your rules well enough to know that you're breaking them, you're going to feel it in your gut every time. You're going to move your stops. You're going to take profits where it's not appropriate to take profits. You're going to panic and you're going to feel that panic. Um, and then this little historical study every morning, guys, it's going to prepare you for the day. It will accelerate your learning because you know what you're looking for and you know what you're looking to avoid. But one of the great things about this spreadsheet, guys, is not only will you see the patterns in the market that are bringing you success, not only will you see the patterns that maybe are taking that success, but when you share with me and you go back and study, you're going to see the patterns in yourself that may be robbing you of that success. Everybody has a thing. Everybody has at least one thing. And we want to believe that we're all perfect, but we're not. My one thing, I'm going to tell you right now, and I'm not proud of it, but my one thing was trading in determination conditions. Guys, I traded in determination conditions like I was getting paid to do it. And I didn't realize that I was doing that until I posted in the room a few times. And my brother, who taught the class at the time, said, Mark, I'm looking at your chart. Why do you keep going short into these areas that may stop the market? What is it that has you believing that the market is going to break for you when it's held for everyone else for the last 1,000 times? And hearing it, I had to say to myself, man, okay, my thing is trading in determination conditions. And when I went back and I studied my spreadsheet, I realized that that was very true. So I made it my mission. I'm not going to trade in determination conditions. I'm going to avoid these areas that stop the market. And eventually I was able to get a little corrective help there from my brother, because he was there every day, 15 hours every week, teaching the class, giving me feedback. He forced me to take the student role rather than just private teaching me on the side. So use your spreadsheet. The first tab is your trade journal. And guys, take your feedback from class and drop it in the notes section. Your second tab is the rules for the high probability trend trade broken down individually, not looking for a trade, but rather looking for 3 advantages that create a trade. So I'm going to give you a study guide that I promise you guys, it's going to make you a chart reader 10 times faster than if you just try to become great at this taking trades. The third tab is when you take these high probability trend trades, when you take these trades, you see these patterns that you want to incorporate into your plan. This is where you're going to build your plan. You're going to build your entry plan, your management plan. Things that you start seeing over and over are going to go into these patterns section. This will eventually come in and work on your plan a little bit more. And then guys, here's the Mark Novak section, the stop 5-1 trades if the termination looks. I've done a little bit of work for you guys, and that's what the final tab is. It gives you kind of a template. What should my section look like? Guys, you should have your perfect entries. You should have your perfect exits. You should have management things, when you'll hold longer, when you'll get out sooner, patterns that you recognize, termination conditions that you find problematic. And then there's about 300 trades from Nexgen users, guys. And if you as a brand new user go through and just start clicking on these, what you're going to notice are these advantages. And you're going to be able to say to yourself, holy smokes, there's people just like me that put their pants on one leg at a time, that are following rules, that are finding success, that are reaching their goals as a trader every day, and they're doing it through simplicity. I need to really embrace simplicity in the beginning. So post in the room, fill up that spreadsheet, guys, like you're getting paid to do it. The people that do this reach their goals faster. The people that do this create recognition quicker. The people that do this are the people that get to their plan and start following it the fastest. We're going to take the first hour and we're going to go through, and you guys are going to learn these trigger looks for when it's okay to trade, these Fibonacci rules for when it's okay to trade. Simulate, practice, break things, mess it all up, guys. I mean, screw it up 9 ways to Sunday, but make sure that you post in the room, good morning, Erla. Because what we're going to do is we're going to fix all the things that need fixing together. You are not in this alone. Not at all. You don't have to do it yourself. You don't have to hope that you pick it up on your own time or through osmosis or something like that. Just practice, break things, post them in the room. Let's fix them together. I promise. I haven't met anybody that I can't fix yet mechanically. Mentally, you may be on your own. The idea is that we don't practice the wrong trades, that you create this muscle memory for always getting the execution right, and then the results tend to follow. We're going to simplify. We're going to simplify a lot, guys. I'm going to give you 2 trades, and I'm going to give you a rock solid plan that optimizes your chances of success with them. What you have to do is you have to learn what looks you're going to commit to. How do you do that? Taking pictures over and over, annotating charts, understanding what it is that you're looking for. And you've got to keep doing that until they get easy, guys. So often I see people get so excited. I just got software. This is awesome. I'm going to take pictures every day. And about 3 days in, they're like, well, this feels like work. Screw that. I bought software. I deserve to win. It doesn't work like that. It's like buying the most expensive elliptical with the fans and the heart monitors. And if I don't drag my fat ass up onto that thing and get to work, I'm still going to be unhappy with my weight. So, guys, you have the greatest tool in the world in your hands right now. Let's take the next few hours and let's start learning how to use it. And let's do it with the high probability trend trade, guys. That trade that has only 3 rules, right? Because we're keeping it easy. That trade that gives 3 advantages, that teaches you how to read your charts, how to recognize advantages, how to put yourself in a position where every time you look at your indicators, you can say to yourself, I do have momentum. My path is in fact clear. Let me find an entry area and pull a little money out of this market. So we're going to start with momentum, guys. Momentum starts on the large chart. If you guys remember, large chart leads the way. Large chart is what says, hey, you have momentum. You have a clear path. So what does momentum look like, guys? First and foremost, we're following the direction. If the background is green, in order to have strong triggers, your small triggers and your large triggers must be green. These are your small triggers, solid lines. 2 lines act together to create small triggers. They're not these little individual entities. Large triggers are dashed lines. All these are is moving averages, guys. There's nothing fancy. I have no idea what the math is going into them, but let me tell you what I do know without question is that when the background is green, my triggers both have to be green in order to have strong triggers. And my small triggers break away from the large triggers. They create space. Picture scissors opening up. The space created between the small and the large lets me know that the odds are favorable for the market to continue up. Odds favorable momentum is going to be the battle cry in this room, guys. You're going to hear it all day long. So when the background is red, small triggers below the large triggers, everything has to be red for it to be strong triggers. Space between the 2, where's my laser pointer? Hold on. Pew pew. Space between the 2 lets me know that the odds are favorable for the market to continue down. Guys, when you have odds favorable momentum, it is the best of the best time to buy Fibonacci support on that smaller, faster chart. On your large chart, that slow moving, rambling down the highway chart, it looks like a tail or a wick. If you get in the habit of circling these tails, what you're going to find is that you have the ability, using that smaller, faster chart, to pinpoint exactly where these tails are most likely to form. You are going to refine this broad stroke of a brush, know exactly where that tail is most likely to form, and this becomes your entry for the highest probability trend trade long or the highest probability trend trade short. So guys, it's a very simple look. It doesn't take long to master. You can literally go back through the market, scroll back on your charts. I accidentally killed my charts, so I'm not going to do it just yet, but I will get to it. And you can begin to see where there's odds favorable momentum. You can start to circle these tails. Start the process of studying, putting yourself in a position where you can recognize these strong triggers at the drop of a hat. If this is strength, well, there's an opposite, right? For every action, there's an equal and opposite reaction. When the small triggers work their way inside of the large triggers, guys, this is what we call a weakening of the large triggers. And when I have a weakening of the large triggers, anything can happen every time. Anything can happen up or down. So what's going on? This is like giddy up, let's go, man, I've got every advantage. Life feels good. Strong triggers is the best of the best. Strong triggers breaks areas. Strong triggers pushes a market. And down here, we're like, meh, it might go up. It might go down. Hell, I don't know. I can't predict it, but I can see clearly that my advantage is gone. So for the brand new user, odds favorable momentum is the best of the best. For the experienced chart reader, when one line falls inside of those large triggers, you can say, I still have momentum, but the momentum is slowing. Let me use my chart reading to make sure that all my charts agree, and maybe I can make a little money on the short side. And then with both triggers down, small triggers inside of the large triggers, you have that weakening or that slowing of the trend, and anything can happen is what I want rattling in your head. I don't have an advantage. The advantage of momentum is gone. Let me make sure that I still have a clear path. Let me make sure that I still have an entry area that supports the trade, and let me manage it aggressively. And when these weak triggers hit areas, guys, these areas are known to stop the market. And that's our little segue into termination conditions. And that's the second rule that happens on a large chart. I'm going to pull up a large chart real quick because I want you guys to see something pretty outstanding. And I'm going to show you a couple things. The first thing is that this is odds favorable momentum to the downside. The second thing is that that's one of those pullbacks on a smaller, faster chart. Does everybody see the odds favorable? Is everybody comfortable with this look? This is strong triggers up. It's always strong triggers up. It doesn't mean that there's guaranteed a trade, but it means that it is the best of the best look for going long. This is strong triggers down. Doesn't guarantee that there's a trade, but this is the best of the best look for going short. Remember when I said that you'll be able to pinpoint exactly where that tail is most likely to form? I want you guys to see something because this happened while we began class. Let me show you what it looks like on a smaller, faster chart. The circle over here pulled directly back to resistance inside of favorable large triggers here. And here's one of the cool things, guys. I want to show you the picture that I took and put in the room. 77.84 is where I said, you know what? If the market pulls back, I should be in a short trade per the rules. Let's see where it pulled back to. Oh, looks like it got to about 81 because the mid band came down. I would have moved my entry, guys, and that would have been my short trade. This is what we're learning right now. But first, you have to understand momentum and that this is your best shot. And then we've got to get into and make sure that we're not trading into termination conditions. I thought that was kind of cool because that's everything that I teach, and it happened live for you guys. And I hope somebody's going to show me a picture of that this morning. And then Parker, Tradeovate or Rhythmic. One thing that Apex said, guys, about 2 months ago was that they will be moving away from Rhythmic. And you should be updating to Tradeovate. That they sent an email out about 2 months ago. But yes, both do work, of course. Once I have momentum, I need to make sure that I'm not trading into an area that may stop the market. These are what we call termination conditions, guys. And all a termination condition is a Fibonacci-based indicator that has the potential to stop the market. These are lines you cannot merge, Parker. You would have to start a new account. So if you're on Rhythmic, in a perfect world, you would never have to merge because you would just be stuck there forever because you're a rock star and never blew out. Termination conditions, lines on the big chart. That's the easiest way to think about it. Lines on the big chart, guys. These can be problematic. These are the areas where, let's go back to this cool picture, where these guys, the people in charge, the guys that move the market, that create momentum, that establish trends, this is where they react. This is where buyers buy, and this is where sellers sell, and this is where profits are taken, and this is where trades are entered, and this is where trades are exited, and sometimes this is where the forces that move things fight. You know about these areas long before you get to them, and that's one of the wonderful things about Nexgen, guys, is you can see these lines before price ever gets to them. And what we're going to do is we're going to use those trigger lines, the same trigger lines that create momentum, that let us know that we have that advantage. We're going to use those, and they're going to let us know if these areas are likely to stop the market, the way these yellow one-to-ones is right here. They're gonna let us know if they have the potential to break, the way the yellow one-to-ones actually broke over here, or if they have actually broken, and if we've gotten to a point to where we have that clear path, where there's nothing in our way, where there's room to our profit targets, where rule number 2 is met. And we're going to do that with a simple lesson, guys. When price reaches an area, remember that decisions are made at these areas. So price has to get to the area for the decisions to be made. When price reaches the area, I want everybody in this room to just ask themselves, where are my trigger lines? If price reaches Fibonacci support, check your trigger lines. If they're not below support, do not take any more trend trades short on the small chart. It's really that easy, guys. The same is true if price reaches Fibonacci resistance and the trigger lines remain below resistance. Don't take any more long trades into that Fibonacci area. It may stop the market. Don't overthink it. Let it be easy as a brand new user. If price reaches yellow one-to-ones and the triggers remain above, don't go short into the one-to-ones. There may be a fight, there may be a reversal. The reality is, guys, is you don't know what the people in charge are going to do, but you have this safeguard to keep you from hoping that they don't do the opposite of what you're wanting. Price reaches Fibonacci support. Triggers don't break, they stay above. No more short trades, guys. Even with odds favorable momentum, look at the bounce. And then here we have one of the divergence lows that can be used as a termination condition, guys. When price goes down and then up and there's a loss of momentum, it's going to create this divergence low. It's going to create this blue line swinging off to the right-hand side. This is not a termination condition, guys. Price creates this line, and it doesn't create it until about the third bar up. So price isn't reaching it. Triggers aren't staying above it. It's just a pivot with a loss of momentum. But when price reaches that divergence low and the triggers stay above, now it's a termination condition. And if price exceeds it and trades back above, it's what we call a pivot stop out. And a pivot stop out is a termination condition that adds a little power to that potential bottom. So if price trades below a divergence line and then back above, no more short trades into that area. These pivot stop outs are strong, and they become even stronger when they coincide, when there's a fib right at them. So these are your termination conditions at a low, guys. Is everybody comfortable with the recipe? It doesn't change going the other direction. Termination conditions at a high. There's that pivot with a loss of momentum. Not a termination condition, just a loss of momentum. But when price reaches it, the triggers remain below, it becomes a termination condition. When price trades above it and back below, it becomes a pivot stop out. So not a termination, becomes a termination, becomes a pivot stop out. A pivot stop out is a very strong indication that the market may reverse. Price reaches resistance, triggers below, no trade into resistance. Same thing with the one-to-ones. Guys, the recipe is simple. It's a large chart recipe. Rule number 2 is designed to keep you from taking trades into areas that may stop the market. So when is the area broken? When both your small triggers and your large triggers get to the other side of the area in question. The area is considered broken. Support behaves as resistance. The path is clear until I reach the next area. So there's really 2 options for new users. Either it's a termination condition or it's a clear path. And I want everybody to notice that with the clear path, remember that refinement process? You guys are going to be able to pinpoint right where the top of that tail is likely to form. You're going to couple the momentum with the clear path. You'll find your entry and hopefully ride that momentum all the way down. So brand new users, price reaches, no triggers through, no clear path, no trade. Let it be simple. Don't overthink it. Smalls and large get above. The area is now broken. The path is clear until you reach the next area. You've got room. And this is your first 30 days, guys. Don't overthink it. Become a chart reader in your first 30 days. Get focused on recognizing these advantages because that's going to take you to your medium probability trade, the second trade on the plan that I'm going to give you. And this trade revolves around momentum, having odds favorable momentum, the best of the best look in your trigger lines, but only the small smash through the area, really just decimate the area, 3 to 4 points beyond. Not peek its head over, but literally zooming through that thing. When your smalls smash through, but your large triggers are lagging behind, 6980 here has the potential to break, but it's not broken until both the small and large get above, which means that it's not a clear path, which means that if you take a shot at this, it's never a high probability trend trade. It's a medium probability trend trade. It means that it has to be managed a little more aggressively, that you've got to make sure that everything is right on every chart. And you'll see that sometimes they do break, and you may pinpoint exactly where it's most likely to continue. And sometimes you think it's going to break, but it doesn't. The market reverses and heads the other direction. So this is not high probability. This doesn't fall into the area of trades that typically win 70 to 80% of the time. But this is a look that you're going to grow into, that you're going to learn how to take advantage of, and I will give you a plan to take it. But for brand new users, can you give me a why in the room? Let me know. If price reaches the area, none of the triggers break, sit on your hands and do nothing. Let's see what the decision is before we get risky. Large and small breakthrough, we have a clear path. And guys, a lot of the times I'll ask you guys, is everybody cool with this? Don't be afraid to put a Y in there. Thank you, guys. This is the easiest way to learn how to participate in class. If I say, are you cool with this? You can give me a Y like these 4 people did. And I'm like, cool, I don't have to go back with Malcolm on these termination conditions. He's comfortable with the recipe. He knew not to go short here. But what happens is you're sitting in the back and you're like, oh my gosh, what if my answer's wrong? What if Mark says, hey, are you cool with it? And I say no. Am I going to stop class? Hell yes, I'm going to stop class for you. And we're going to go back and we're going to talk about it. We're going to find some live examples because, guys, this is like no man left behind. And I need you to give me that in. I need you to say, I need a little clarity. I need you to say, hey, Mark, it's not a hard concept, but I'm brand new. Can we find a few more examples just so I'm comfortable? And I'll be like, absolutely. Let me say this 10 different ways and hopefully one clicks. So guys, don't be shy. Thank you for the whys, but I'm telling you, your answer when I ask if you're cool with this, it's gonna change the direction of class if need be to make sure that you don't get left behind. So price reaches yellow 1-to-1s. Not a darn trigger breaks through. Everybody in this room is absolutely brilliant. And they say, I'm not going short because my clear path isn't present. Oops. There's nothing for me to do. My statistical advantage is gone. To hell with short trades. I like money. And then it bounces all the way up and you're thinking, whew, thank goodness I didn't go short. And it reaches resistance and all the triggers remain below. And like, wait a minute, I can't go short and I can't go long. Oh, that's okay. Mark told me that 90% of my day is reading charts. 10% of my day is taking advantage of rules being met. So guys, your 90% goes from support to resistance. There's not a rule met. I can't go short. I can't go long. I can't go short off resistance back into another termination, especially with my small triggers up and my large triggers down. I don't even have momentum to support it. And I get caught in this little fight for like 45 minutes. And I say to myself, man, this is 45 minutes that I haven't made $1. When the rules are met, Rob. When the rules are met. How's that for a Sunday school answer? But watch this. Rob, my rules aren't met because I don't have a clear path. Let's get rid of all this noise. And I want you to see how this works. My rules aren't met because I don't have a clear path. I don't have a clear path down. I don't have a clear path up. I don't have momentum. I don't have a clear path up. Still no momentum. I don't have a clear path up. Still not a clear path. And then eventually, Rob, my smalls are outside of the large. This is rule number 1 being met. My small and large triggers are both above resistance, and I haven't reached the next area. Rule number 2 is met, And I told you you're going to be able to pinpoint exactly where that tail is most likely to continue. That's rule number 3 getting met. Rob, this is your 10%. And if you can hold your water when the rules aren't met, again, Muser, I'm going to give you credit for this for the rest of your life. If you can do nothing when there's nothing to do, these trades will come to you. The problem is this 90%, guys. And this is where a lot of you are going to get tired of waiting. And you're going to lose $250. Or you're going to form an opinion. And you're going to lose $500. Or you're going to be so convinced that you're right, you're going to go long 4 times and short 4 times. And you're going to blow out your account. And you're going to blame Nexgen for your inability to follow rules. And you're going to say, well, these rules don't work. I couldn't make any damn money. And everyone else in the room that's gone through this, that's presented these charts, that's had the feedback, that developed the trust, they were sitting on their hands. They're going, man, I know this shit's coming. Let me wait for my advantages. And every one of them got into this trade. And they took it to resistance. And it's not the $450 that you make on this trade, guys. It's the money that you don't lose on the trades that you don't have to take. It's the money that you don't lose by trading without advantages. That's typically what separates successful traders from traders that are struggling. So Rob, I hope that made sense. 1 and 2 has been momentum and a clear path for as long as you've been in this classroom. For as long as I've taught this classroom, rule number 1 is strong trigger lines, and strong trigger lines create momentum. And since the first day, 3 years ago that I started this classroom, rule number 2 has always been no termination conditions. And once those are met, guys, once those are good, we just start looking for entries. Initially, it's the high probability trend trade entry. That's the best of the best, the easiest to catch. And then it may be a momentum trade. It may be a different trade, but your chart reading will take you to that next level. So guys, rule 1 happens on a large chart. Rule 2, lines on a large chart. Well, rule 3 is going to use lines, but it's going to use it on a small chart. They're going to use it for entry. But I want to talk about one more time utilizing a small chart when rule number 2 isn't met. The only time on a small chart that rule number 2 isn't met. And this is going to be 3 divergences in the same price range may terminate the trend. 3 of those losses of momentum may terminate the trend. It says may. It doesn't say that it definitely will, that it has to, that it's obligated to, that you are guaranteed that it's going to reverse the trend. But 3 divergences, 3 losses of momentum in the same location, guys, it may terminate the trend. Your advantage is gone. Your clear path is gone. You're now hoping that it goes down rather than saying that there's nothing in my way. 3 divergences becomes more powerful with weak triggers. Remember the difference? Strong triggers is still strong triggers on a small chart. Weak triggers is still weak triggers on a small chart. It becomes more powerful still if that third pivot is higher than the previous, lower than the previous from a high. And guys, you're going to use this on a smaller, faster chart, that one that gives you 15 to 30 bars per 1 bar on the large chart, and you're going to be able to recognize when that large chart appears to be turning from nowhere. You're going to be able to recognize when, even with odds favorable momentum and a clear path, you shouldn't be taking that next trade. And guys, this is the only termination condition that I think about on a small chart. If I have a fib on a small chart and my rules are met on the large chart, I'm hoping that fib gives me a bounce where I pinpoint where the market is most likely to continue. So that's termination conditions, guys. Termination conditions give you a clear path. Rule number 2 is decided on the large chart. Rule number 1 is decided on the large chart. So I'm going to ask all you new users, the background is green and my trend is up. My small triggers are above and away from the large triggers. Momentum is strong. I haven't reached resistance. I have cleared the previous area. My path is clear. Can you guys give me a Y if you see on this large chart that it's time to look for an entry? Awesome, because guys, this is the moneymaker. The triggers aren't above when the tail is formed. The triggers aren't above what, Rob? Can you show me a picture? Let's make sure that we get some clarity on this. Here the triggers are above, right? And guys, we're not trading tails. I refuse to trade tails. We're better than that. We're going to trade pullbacks on the small chart. Rob, if you'll take a picture of what you're talking about, we will discuss it and make sure that you're clear. The picture that I just showed, okay, hold on, let's go to it. 3 divergences in the same price range, right? Or this one. Let's walk through it. And I'll show you exactly what I mean. Oh, I know what you're talking about. Hold on, I got you. Are the smalls outside of the large, Rob? Either one at the bottom? Right here? Guys, this is why you presenting pictures is easier than me guessing. Right here? We're going to get there, I promise. But guys, this is the cool thing about the class, because what we're doing right now is 100% okay. The yellow circle. All right, so let's look at it. Smalls are outside of the large. Rule number 1, right, Rob? It's not the strongest momentum ever, but can we agree that the smalls are outside of the large? Perfect. The top of the bar is right here. So it's right here, Rob, that we're making the decision that it's time to look for an entry. And let me go back to this picture and I'll show you. The top of the bar right here is where we're making the decision that it's time for an entry. And right here, I have a clear path. Are you cool with that? Can you see how rules 1 and 2 are met? And this is the important part. I circled the tail, but this isn't my entry because this isn't my entry chart. And this confuses some people because I do talk about the tails. So what I would have to do here, Rob, is once this look was on my large chart, the triggers aren't through what? These pink 1-to-1s? I gotcha. Why would the trigger, I'm so confused. The triggers are above everything. I may be confused here. Rob, sometimes, I'm going to tell you right now, I'm a man and I don't communicate well. So when I talk about termination conditions, what's important to me is that price hasn't reached this area and that my triggers are above this area. That's what dictates the clear path. I'm not sure what the triggers need to be through at this point. My smalls are outside of the large. The bar to the right, I'm not entering on the bar to the right. Right here? Right there? Okay, I'm already in a trade here. I got in down here. By the time this happens, I'm up 150 bucks. What's the concern that where the triggers aren't through? Are you looking at these pink 1-to-1s and saying to yourself the trigger lines are not through that area? This is, if you are, that's cool. This is an easy fix. Is that right? The triggers aren't through these pink 1-to-1s? No? Man, I hate to give you a task. Will you do me a favor? Will you take this picture? No worries, guys. At the green midband. Okay. The triggers aren't through the green midband. Yes. See, guys, we always get there. I promise we always get there. Thank you for that. Because, Rob, there's 1,000 people wondering that. And here's your answer. The large chart midband behaves as a termination condition only if the large triggers are a full bar away. So, Rob, what you did is you didn't let me get away with an incomplete lesson. Large chart midband if the large triggers are a full bar away. And the cool thing is we can look at that same picture and I'll show you what I mean. This midband, when price hits it, Rob, see how far away the large triggers are? There's room for an entire bar to get back to them. This midband is behaving as a termination condition. Man, thank you for this, because this is a lesson that needs to come out. This is what we call the gap theory, and this is the only time that a midband is going to behave as a termination condition. If my large triggers are snuggled up right on it, I'm not worried about it. The only time this is rule number 2 not met is with this look. Once those large triggers are closer than a bar away, the midband is no longer a termination condition. We call this the gap theory. So let me show you exactly what happens. So on the gap theory, here's a great example of it. Even with momentum, everything down, when price reaches that midband and the fib, those large triggers stay a full bar away, Rob. It's likely to close the gap back. And let's go to a live market as well. And let's see if we can come up and show you a couple different examples. Man, thank you, thank you, thank you, thank you. When I got here to this one, the large triggers weren't a full bar away, even though they hadn't cleared the midband. I wasn't concerned about that midband as a termination condition the same way I wasn't here. But, dun, 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 here I hit the midband, and the large triggers are a full bar away, and it closes that gap. Does that help a little bit, Rob? Sometimes, guys, this is one of those things where you'll keep yourself out of trades saying, oh no, they're not through the midband. And true story, Rob, is I did that about 1,000 times until I got this exact same lesson. So that gap theory, you see it a lot. There it is there. Man. And here it's darn near 100% true. And right here, we see it again. And it's an outstanding pattern. And guys, this is a great lesson. But when I get to that midband back here and the large triggers aren't a full bar away, it doesn't scare me. You've been losing. Well, this has nothing to do with momentum, Rob. This has everything to do with whether it's a termination or not. So momentum is 100% constant on every time frame, 100%. The look never changes, and I'm going to show you exactly what I mean. When these are down and begin to widen and these are broken away, you have momentum here, still, 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 and now it's beginning to slow. And then once those small triggers get back inside, it's game over. So there's a life cycle, and you can see how the boxes get smaller and smaller on the way down. Awesome, 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 slowing, gone. Does that make sense? It saved your ass so much. Once you get the concept, it helps. And then the same is true the other direction, right? Here's the beginning, and there's the end. Man, and guys, this is why you've got to use your voice during classroom, because I will stop everything. There's where my separation begins. There's where my separation ends. And you can just say, my highest chance of success comes in this range. This is momentum, strong triggers, rule 1 met. Pretty cool, right? I love this classroom, and it is 100% fueled by your questions. So guys, I'm going to take that one, and thank you for that. Now I'm going to drop it into my spreadsheet, and I'm going to say to myself, strong triggers start to finish. So I know exactly what I'm looking at. I can take this lesson, and I can use it over and over. But guys, if you're not going through and you're not taking these pictures and you're not dropping them in your spreadsheet, what are you doing? Give me the chance, right? Give me the chance to walk through this. So I just put that picture in the room. Absolutely beautiful lesson there, Rob. And that was exactly what I think a lot of people in the room needed. So Because the large triggers aren't a full bar away like they were here, who cares about the mid-band? It's just a squiggly line. Great, great lesson. So with momentum, guys, with a clear path, we're going to turn our attention to that smaller, faster chart. We're going to turn our attention to the refinement chart. We're going to take literally an X-ray of this one bar. And because we have an X-ray of the bar, we're going to be able to refine that broad stroke of a brush. We're going to pinpoint where the tail is most likely to form. But we're not doing it on the large chart, we're doing it on the small chart. And that's what rule number 3 is designed for, guys, to get you into the area where the market is most likely to continue. So rule number 3 says, I'm going to use a limit order. Guys, we're going to be so stinking good at this that we're going to wait for the market to come to us. I'm going to use a limit order at an area. Fibs, mid-bands, yellow 1-to-1s. But I'm not just jumping into an area. I have to wait for a pullback. I have to wait for that small crowd, those freaking yahoos that love to fight everything. They create this pullback, this little push counter to everything going on here. So I'm going to buy or sell a pullback at areas, fibs, mid-bands, yellow 1-to-1s. But here's the deal, guys. I want those areas to be inside of triggers, those moving averages. Moving averages on your small chart, guys. You have large triggers, you have synthetic triggers. The large triggers are native to the chart. That's how we're going to gauge momentum and make sure that it's its absolute strongest. The synthetic triggers are just the large triggers from the large chart. That's all they are. When these two overlap, when they're one on top of the other, I want you to put one hand on your desk, put your other hand on top of it. That's overlapping. If you have them 2 feet apart, guys, they're not overlapping. When they're tight, one on top of the other, we expect price to come back to those triggers, those moving averages, that correction point. When I shoehorn fibs, mid-bands, and yellow 1-to-1s inside of that tiny little space, guys, this is the best of the best entry. But what happens is sometimes they split and splay and work away from one another. When you have this look, guys, there's 2 correction points, 2 moving averages that price may return to. It decreases your accuracy tenfold. And you will get to a point where you're reading charts where you know when it's okay to take a shot, or you'll wait for confirmation. But brand new users, what we call favorable large triggers, where the small and the large are overlapping, one on top of the other, creating the absolute smallest window of opportunity, the point where the market is most likely to continue, that's where the easy trades happen. I put a picture of that in the room for you. So what we're going to do is we're going to let the large chart lead the way. Small's outside of the large, the strongest possible look, the best of the best, momentum is present. And this is, guys, this is historical, right? The top of this bar has not reached Fibonacci resistance. Does everybody see that? There's room to the target. Small and large got above resistance. Resistance is now support. My path is clear. Everything on this large chart, and the market's trading right here, says go cat go. Says, man, let's look for a pullback. Let's wait for the small chart. If I circled this tail historically, right, going back, I'm like, I'm just going to study these tails. Let's see what they do. That circle should line up with an area of support inside of favorable large triggers. The exact same way, let's go back to that crude oil. Oh my gosh. We'll go back to crude oil in a second. The same way on crude oil, it came back to that. It came back to that area of resistance inside of favorable large triggers. So I'm not trading the tails, I'm trading the pullbacks to the areas. And the easiest way to do that is this simple little drill. Absolutely, Kenny. I'd put it a tick or 2 below it because it's already told me that that trade's doing what I want it to do. Perfect. Absolutely perfect. So guys, when the large chart says go, you're going to wait for the reversal bar. The reversal bar is the beginning of the pullback. Your entry for the high probability trend trade is not on that reversal bar. And I didn't even think that would ever be a problem until I tried to teach my wife to trade. And what she did is she goes, I know I have to wait for the reversal bar. And then this would be her entry right here. And then she'd get stopped out on the way down to the right entry. So it's not the reversal bar, guys. At the time of the reversal bar, you're going to go through this little process. The first thing you're going to do is you're going to say, where are my triggers? My large triggers, my synthetic triggers. Large might be on top of synthetic, synthetic might be on top of large. It doesn't matter. These trigger lines are where we expect price to correct to, where we expect that moving average to right itself. That's your red box. Hitting the triggers is not your entry for the high probability trend trade. Hitting the triggers is just price correcting. So our advantage comes from having areas inside of those trigger lines, fibs, mid-bands, yellow 1-to-1s. What these do is they give the market something to bounce off of. They give it that ricochet point. Pachoo is the sound it makes. And the reality is we don't know if it's going to be the top ricochet point or the bottom ricochet point, so we create a window of opportunity from the highest point of support to the lowest point of support inside of favorable large triggers. Guys, this is where the market, this blue box, where the market is most likely to continue. If this is going to be one of those 70 to 80%, this is where the bounce is most likely to happen. Most likely, not guaranteed, most likely to happen. This blue fib beyond the correction point outside of the triggers, it's the saddest fib on the chart, guys, because it's not in the window of opportunity. If price pulls all the way down here, we've blown through all the goodness. We don't want to be in that trade. And the same is good going the other direction. I want you guys to see this. The reversal bar starts the pullback, doesn't initiate the trade. I find my triggers, large and synthetic, and I'm looking for areas within. And there's only one. I have one freaking line where that market is most likely to continue. This feels pretty good. Talk about precision. I'm going to activate a limit order just below the bottom of it. And I'm going to say to myself, if the market pulls up to my limit order just below, I'm literally going to sell the market as the market's coming up on a smaller, faster chart. I am absolutely going to buy the market as it's coming down on a smaller, faster chart. And guys, this becomes your window of opportunity, your entry for the highest probability trend trade. We don't trade tails because the market's all the way up here. This tail doesn't exist. This tail is a byproduct of the pullback. Here's the top of the one bar on the large chart. Here's the tail on the large chart. And guys, you don't even get the second bar until it matches up here. So we're going to refine. We're going to wait for a pullback. We're going to identify triggers and areas. Boom, bang, bing. And that's going to become our entry. Is the mid-band stronger chance of bounce? It sure seems like it. It's a powerful mofo. Kenny? No. Simply no. Avoid the temptation to make one thing stronger than another. Avoid the temptation to make a mid-band stronger than a fib stronger than 1-to-1s. Avoid the temptation of making synthetic fibs not as strong as native fibs, guys. Lines inside of triggers, right? So when is it stronger, Kenny? When do I say to myself, oh, I love this. When 1-to-1s overlap a fib, overlap a mid-band, and they're all shoehorned inside of those, because then it's not that one is stronger than the other, but I got three big bad mofos inside of triggers right there telling me that I'm going to create a bounce, that I'm more likely to create a bounce. Does that make sense? So when I get a fib, a mid-band, two sets of 1-to-1s, and another fib inside of there, holy crap, I can't wait to enter at a limit order just below. When I've got two fibs, yellow 1-to-1s, and a mid-band inside of favorable large triggers, heck yeah, dig it, love it. And guys, here's the beauty of the methodology. The first thing is that we can always trade with advantages, right? Having these advantages minimizes our risk because it gives us a statistical advantage. Momentum reduces risk because the market is more likely to continue in the direction. No termination conditions reduce risk because you're not trading into an area that may stop the market. Pinpointing where the market is most likely to continue, reduce risk. Because when you know where that bounce should happen, when you believe in it, when you trust it, when you practice it, when you study it, well, then you know where the market shouldn't go, and it shouldn't go beyond that correction point. It shouldn't go beyond those areas inside of favorable large triggers. If it does, you've lost your edge. If it goes beyond that area inside of favorable large triggers, rule number 3 is no longer met. It's no longer a high probability trend trade. It doesn't mean that there may not be opportunities when you grow, but what it means for the brand new user is that, well, it's not what I wanted. And I'm going to put my first stop, my protective stop, just beyond that window, about 4 or 5 ticks. Anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. Your stop will get hit. Drew, your stop will get hit. Erla, your stop will get hit. Jen, you're going to get stopped out. Morgan, just expect it. You're going to get stopped out. Every 10 trades you take, I want you to be mentally prepared to lose 2 or 3 of them. It's cool. It's a cost of doing business. It's a price that we pay for having this methodology, having this statistical advantage every time we go in. But the key is, and Morgan, I'm going to say it, did you have momentum? Did you have a clear path? Did you have an entry area? If you did, I want you to dust off and say next. If you didn't, I want you to say, man, I forfeited an advantage and look what happened. Maybe I should stick to my rules, guys. And the coolest thing is that once it goes in the direction of your trade and gives you a reversal bar up or down, you can reduce your risk a tick or two above or below it. So Kenny, that's your confirmation, right? If you wait for the reversal bar, your risk is already established. And it's not uncommon to see you guys take the perfect trade that is destined to fail because the small crowd ate their Wheaties and lose 30 or 40 bucks instead of losing $200 to $300. And guys, you've got to learn your entries. You've got to understand where the market is most likely to continue, because once you do that, once you focus on this trade, you can read your charts. You can identify momentum. You understand termination conditions. You know where it's likely to continue. And guys, I'm going to tell you right now, anybody in this room that started with me, that studied the high probability trend trade, will tell you 100% that if you make this trade so easy to recognize, that stuff is going to pop off the screen. Advantages are going to pop off of the screen at you. So, no reason to trade into a termination condition, right? No reason to fight the gap theory. Isn't that cool? Even with odds favorable momentum, not one of you went long at this mid-band because it was into a termination condition. And Morgan, if this was your picture, you got to run a lap, brother. And then if you're JW, dollars to donuts, JW said, with weak triggers coming from the middle of nowhere with divergence, I'm going to find a way to capitalize to get up to that spot. And when we see his chart, I bet you that's what it is. But we're not there yet, guys. I'm going to start giving gifts. I'm going to play Santa Claus on you right now. This is the gift of Chart Reading 101. This is a Word document that is designed to make you a chart reader. This will accelerate the learning process tenfold, I promise you. And it involves work. And this is the part that you guys hate. It involves work. It involves you guys having to get some stuff done. So I want you to go back. I want you to scroll back historically. I don't want you to even do it in a live market. I want you to open up your large chart. I want you to blow it up and not worry about trading. And I want you to say, this is momentum. Take a picture, right? That's momentum. That's a termination condition. That's a termination condition. That's a termination condition. This is weak triggers. That's a termination condition. That's weak triggers, bigger pushback. That's a termination condition perfectly. Guys, do you see how many lessons we're getting without taking a trade? There's another termination condition. There's another termination condition. Holy crap, there's another termination condition. But that was strong triggers that got us up to it. So what you can do is you can go back, guys, and I promise you, with one market, you can take 25 pictures of strong triggers. You can take 25 pictures of weak triggers. You can take 25 pictures of a clear path, of termination conditions, of the 50-50 look, and you can come up with 20 pictures of high probability trend trade long and short entries. And this will take you, it was just the live crude chart, Parker. If you have a question, take a picture of your chart, write your question on the chart. I'll get you the answer, I promise. But guys, you've got to go back and take these pictures and you've got to talk about the whys. You've got to open it up and you've got to take that picture and you've got to say to yourself, self, Come on, picture. I have a flow going. Self. This is strong triggers because everything is red, because the smalls are below the large, because there's space between. This is strong triggers. This is odds favorable. This is momentum. This is rule number one. And what you're doing is you're associating that look of strong triggers with the rules, with the advantages. And if you do that, if you go through and you do this task, guys, I'm asking for about 4 or 5 hours of your life to make you a chart reader. You're going to get good, and you're going to be able to piece these individual parts together to create a trade. And I'm going to tell you right now, and I'm going to say it in the nicest way I know how. If you try to skip this, if you try to become a money maker instead of a chart reader, if you try to win instead of understanding why you win, if you try to trade hope and adrenaline instead of rules, you're probably not going to make it in this business. But if you have a clear-cut plan that has been proven to win more than it loses, if you understand the advantages available to you on the chart, if you can recognize them, if you study them until they become easy, well, then you're going to be able to do this, guys. This is your KISS plan. This KISS plan is a stepping stone in your journey. Man, Parker, I'm dying to know, brother, what are you curious about on crude oil? I've got weak triggers. I've got a termination. I've got another termination. My trend is up. My triggers are down. I don't have a clear path. This is a go make a sandwich pattern, for lack of a better term. This is a great time to pet my dog behind the ears. This is a great time to text my wife and tell her she's pretty. Zero advantages present right now. And then here is how to catch the best of the best. Show me a picture of your crude oil workspace. Let me see what you have going on, Parker. And I bet you I can fix it in a moment's notice. Let me guess. It looks like it hasn't moved in a while. If that's the case, this white arrow up top will bring you back to the most current bar. Maybe you're saying, holy crap, I can't see any bars at all. This capital F will bring it back into view. Pretty cool, right? Sometimes we scale our charts. When you say non-existent, like there's no chart there at all? Okay, so when you closed crude oil, Parker, did you use these red X's that say close? I bet you did. I know because I've done this one. Yeah, I did it. No worries. So let me show you something cool. This is what you're going to need to do, and it's a little bit, but it's not a lot. We're going to go to the resources page. So what you did, Parker, is you deleted all of the charts within the workspace instead of just closing the workspace. So there's two ways you can do this. You can get with tech. Jason and tech will get you all squared away, reloaded 100%. But what you did is you deleted your workspace, essentially. If you come to the resource page and you rerun with, if you come to the resources page, and you have to close NinjaTrader to do this. Close NinjaTrader and download the indicators and run this. What it'll do is it'll put all your workspaces back in there, all your templates, all that good stuff like that. And then when you close your workspace, and this is such a common thing, I'm actually making a video on it today. Man, I take a lot of pictures. Hold on. Dun, 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 dun. Where's all my pictures? Here we go. I think this is the one. Nope. Here we go. So what you can do, and yeah, Morgan did it too, is if you ever close out, guys, if you ever hit that red X and you don't, and like you reopen and the charts are missing, you can rerun the indicators, or like Morgan said, revert last save in the archive workspace folder. I've never done that. Morgan's smarter than me. If you notice that you accidentally close one out, just click no on when you save it, and it'll magically reappear when you get there. And then Dude, that's awesome, Morgan. Thank you for that. So you've got two options then. Dude, that's awesome, Morgan. Thank you. Good stuff, Parker. But it's so common that I made a video on it, or that I'm actually making the video on it today. And then again, guys, I can't stress this enough. If you have any sort of technical challenge at all, and if you're like me, I'm not a tech guy. True story, not a tech guy. Um, Drop a ticket in with Jason and let him fix you. Jason can fix 99.9% of problems in the same time it takes me to figure out what the problem is. And what I've realized with him is that the only way he can't fix something is if it's not actually broken. Everything else is fair game to him. So good stuff. Um, Little digression, but guys, this is how the classroom works. All you have to do is speak up. We'll get you answers. And if I don't have the answers, Morgan's got my back apparently. Thank you, Morgan. And then if Morgan's not here for you, then Jason and Tech. Guys, this KISS plan, the Keep It Simple plan, this does two things in my life. The first thing it does is it gives new users the ability to have a plan that is a stepping stone in their journey, a plan that optimizes their chances of success with that high probability trend trade and that medium probability potential to break area, what we call a 50-50 trade. And then through simulation study, class feedback, underlined, and continuous practice, guys, you're going to create your own plan. You're not going to be stuck on the high probability trend trade plan. You're not going to be stuck on these rigid blanket rules. You're going to see things and you're going to create trades and they're going to work for you and you're going to be amazed at the advantages that you see. But until you get to that point, to where it's easy, right? Until it's effortless, until everything that you see pops off the screen, and it will get that way with a little bit of study. This is your plan for consistency. And then there's one other thing that this does, guys. And I'm going to say this because I see a lot of faces in the room that have been with me for a while. If your trading isn't what you want it to be yet, if you are such a great chart reader like a lot of you are, that you find yourself trading your opinions rather than your rules. And I'm guilty of that. I'm guilty of getting so good at being a chart reader that I begin to trade opinions. I begin to not follow my rules. I find myself stepping outside of what's been proven to win more than it loses and trade my chart reads. And if you're doing that, and I'm not saying that you are because I would never put that on you, this KISS plan is an outstanding way to reel yourself back in. This KISS plan is a wonderful way to get back in that confidence, that believing in the rules. So just something to think about, new users. Guys, your simple plan for consistency revolves a lot around never fighting the large chart. And there's this funny little thing that my brother wrote, How to Commit Financial Suicide, One Easy Step. And he put two steps, it's two chapters, one step. It's fighting the large chart, guys. Don't trade against strong triggers. When the people in charge establish momentum, you fighting it is like running headfirst into a freight train. It rarely works. And then chapter 2 is trading in determination conditions. When you can identify as well as you're capable of identifying where the market is likely to stop, choosing to trade into it anyway, exhibit A and B rarely works out for you. And it's a true story. And it's easy to get bored, right? This has been going on for 15 minutes now. It's easy to get bored when you're caught between areas. It's easy to fabricate trades. It's easy to break rules. So focus on just learning to follow the rules, guys. And I've never had anybody follow this checklist for the high probability trend trade. Never had anybody follow this checklist to the letter and do worse than 70%. The other side of that, though, is you really have to embrace the idea that 90% of your day is spent waiting. 90% of your day is waiting for those advantages to come to be. But 70% is a pretty good win percentage. Knock a couple out with that. See if you can't find a way to get rich. As you're studying and you're learning, why not make sure that you have a cheat sheet? I'm going to give you all of these, guys. So the first thing on your spreadsheet says, or on your checklist says, it must be coming from a good top or bottom. It's a termination condition that creates a reversal, guys. A no triggers through termination condition that creates a reversal. Parker, everybody does. Everybody gets bored and fabricates trades. And learning to harness that brand new. Learning to not take trades just because you're on sim and you want to see, learning to really focus on rules first is the easiest way to beat that. Action doesn't pay, guys. Catching action that you shouldn't be catching, that's how you bring home an STD. Don't do that. So this is what a good bottom looks like. This is what strong triggers looks like. This is what weak triggers looks like. This is what a termination looks like. This is what a clear path looks like. And then there's entries, long and short, guys. All of this is for you right here. Everything that you need to be successful is right there. So you've got to get good at your entries. You've got to get great at nailing where the market is most likely to continue initially. And then once you do that, Rob, I was hoping nobody really caught that. Once you do that, you have to manage it, right? You got to do something with that great entry. And you know what, Morgan, most people do. Most people think that they have to be first. Most people think that they have to be in right at the beginning to make money, but they don't. And Ron will tell you that this guy is the guy that's in charge. This guy creates trends. This guy creates momentum. This guy reacts to areas. And Morgan, this is kind of my analogy here. If you start thinking of yourself like a remora, if you start thinking of yourself, my brother hates it. He's like, I'm not bottom feeder. You're not a bottom feeder. You're taking advantage of everything that this guy does. You're taking advantage of all of his hard work. When he rips this fella in half, there's going to be enough for you to eat. And then Morgan, there's the guy that tried to be first. He's going right down the bottom. You can't hear his screams because it's just a picture, but he's there. But we're going to fix that, Morgan. You're not going to be that guy. You're going to be the guy that says, you know what? I know when the advantage is present and I know how to take advantage of it, and I don't have to be first to get paid. And once you can define where the market is likely to continue, guys, once you can get in at the absolute best of the best spot, you know where the market shouldn't go. And this is your first stop. So what we're doing right now is we're going to introduce management, doing something with your great entry. And let me say it, you're going to create a management plan, guys, that suits your needs based on your ability to read the charts. You're going to change your management plan dramatically from this, probably. Maybe not. Maybe this is a great way for you to just be consistent. But your very mechanical management plan, and there it is right for you in the spreadsheet in case you want to go study it later. It revolves 100% on your ability to get in where the market is most likely to continue. So you've got to develop trust in this entry. You've got to develop so much trust in this entry that you put your stop where the market shouldn't go, because let me show you what happens new users. And we're going to talk about a few things that are pretty common. The first thing is new users say, you know what? $150 feels like too much. I'm not willing to lose it. I'm going to put my stop 2 ticks above the mid band and hope that they don't come get me. And they typically get stopped out. And then they're going to say, well, 2 ticks isn't enough. I'm going to put it just below resistance inside of favorable large triggers, and I'm going to hope the market doesn't come get me. And guys, it's like there's cameras. They're going to come stop you out high tick, and they're going to drop like a lead freaking Zeppelin. So you're developing trust. One of the other common things, guys, is they say, oh no, my small triggers turned against me. Egads, my small triggers turned against me. That's not odds favorable momentum. What the hell am I supposed to do? And you've got to post that in the room, because this is where I remind you. This is where I say, hey, Morgan, momentum is established on the large chart. This little loss of momentum is just the break we need, hopefully, to get us to our best entry. So guys, first step in your management plan, very mechanical, very if-then, is get in at the right spot and put your stop where the market shouldn't go. With all the advantages that you brilliant people have, it's more likely to give you a reversal bar than not. If you are nervous about selling the market on its way up, wait for the reversal bar. That's fine. Your risk is already established. Your new stop is going to go 2 ticks above it. And there's nothing for you to do at this point. You are either going to get stopped out, guess what? Cost of doing business. Or it's going to go, and it's going to go to your first target. And for you brand new users, the KISS plan says your first target is $100 in the distance. $100, guys. Not a lot of money, right? The hell can I do with $100? My dinner last night cost more than $100, Mark. Guys, $100 is one moment in time. That's not the end of your trading day. That's not your week or your month or your year, guys. And if $100 is the best that you can do every day, and it's not, you're still adding $2,000 a month to that trading account. You're adding $24,000 a year to that trading account by only making $100 a day. Let that bounce around between your ears for a second. If I told you, hey, Ron, I'm going to give you an extra $24,000 a year just for having a crappy little trade that doesn't go the distance. You cool with that? Ron's going to be like, yeah, I'll do something with that 24 grand. I'll buy chili dogs. You'd be crazy not to. Get paid, guys. That's the goal. Get paid. And for the brand new user, go break even. Because now not only did you get paid, you got nothing to lose. And why, Mark? Why would I go break even? What if it comes and gets me? Who cares? Break even lets the new user remember that it's odds favorable momentum and a clear path. That's the whole reason I'm in this trade in the first place. So it gives me the testicular fortitude to hold for that second target, which is only $200 in the distance. Which means that on a two lot, 2 contracts, highest probability trend trade and jumping ship before the trade ever ends, before anything changes, that's a $300 trade, ladies and gentlemen. And that 24, if $150 a contract is the best that you can do every day for the rest of your life, that's an extra $72,000 a year. And what if you roll some of those into trading a 4 lot instead of the 2 lot and you impart the exact same management plan? Well, now you're in 6 figures. And this is what I like to really instill in you guys is focus on simplicity initially. Allow it to be easy. Give yourself the best chance of success with the highest probability trend trade. Focus on becoming a chart reader. Take 1,000,000 freaking pictures and drop them in the room. Every time you have a question, guys, if you ever sit in your office and you say to yourself, man, I don't want to ask them about termination conditions because what if I hold up the class? Guys, hold up the class. If I do 101 stuff for 3 hours straight, I don't mind. It doesn't matter. What's important is that you guys get these very basic concepts down so that you can grow from them. So I'm going to ask real quick, are there any questions about the high probability trend trade? While I'm doing that, I'm going to drop in the room for you. I'm going to drop in the PowerPoint that I teach with. I'm going to drop in the KISS plan. I'm going to drop in the high probability trend trade checklist that you can print out and put on your desktop. I'm dropping in the high probability trend trade checklist that has pictures so that you can use it as a cheat sheet as you go back and take your pictures and fill up your 101 section on your chart. What else? I dropped in the How to Become a Chart Reader 101 document. Every tool that you need to be successful, ladies and gentlemen, you now have. So the only thing Nexgen can't give you is experience. The only thing that I can't provide you is experience. But if I have odds favorable momentum and I have a clear path, and I do have, oh no, well, my areas are on the wrong side of the triggers, guys. My areas are beyond the correction point. Can everyone see that rule number 3 isn't met? That rule number 3 isn't met. My areas lie beyond the correction point. What are my choices? My choices are either I'm a high probability trend trade, I don't take the trade. Let's take the picture and let's go through it, Mr. Flowers. Guys, this is what I do every time I look for a trade. What direction is the market going? It's going up, right? The background is green. How easy is that? That's my favorite part. That's so easy. Where's it coming from? I have a termination that no triggers got through that reversed the market. We call this a strong bottom. This is the precursor for all the great things that seem to happen in the market. My small triggers are outside of the large triggers. My large triggers are wide. They're angled in the direction of the trend. I absolutely, without question, have odds favorable momentum. Is everybody with me so far? Notice that there's no tails. The top of that bar has not reached resistance, and I've cleared the previous resistance. I have a clear path. So my job, ladies and gentlemen, is at the time of this reversal bar to look from the highest point of my triggers to the lowest point of my triggers and to say to myself, where are the areas that fall within? So what I was saying, Mr. Flowers, is that my areas are on the wrong side of those triggers. They're at that correction point. So I have two options. Now I'm going to tell you what your options are. My options are, I can go at the area and hope, or I can wait for confirmation. That's a reversal bar. Or I can say no trade. Jen, I couldn't care less about these little pink dots. They are small swing one-to-ones. Small swing one-to-ones. Couldn't care less about them. They don't show up in any of the materials, guys. They are such tiny little swings, I don't worry. So let's see what happens. And it's probably going to go off them. So it hasn't made it yet. Nothing's happened, right? We didn't even get to the areas. But now my mid-band is starting to get closer into this correction zone, right? Now my mid-band is a half a tick off. I did tell her, Malcolm. Why did I tell her that? Because if I get in at the reversal bar, I'm in right here. What if the market does what it typically does and pulls all the way back to support? I'm probably going to get stopped out. Does that make sense? The reversal bar begins the pullback. At the time of the pullback, I find my trigger lines. Let me find a good picture for you real quick. I've got a million pictures, guys. Here we go. The reversal bar starts the pullback. I identify my triggers. Once the reversal bar prints, I don't enter. I just find my triggers. Oh, no, you're okay. And then I find that. Cool. All right, so another common thing. Market didn't come back. Guys, let's do this. Let's do a buy order right at the very bottom of those triggers. Right at the very base, because there is an area. What are you confused about, Parker? Absolutely not. Why is this the... Absolutely, Rob. Ask every question. Okay, so let me go back to my picture real quick, Parker. You're okay. You're okay, my friend. Odds favorable momentum means that there's a separation between the small and the large. Are you good with that? Oh yeah, we have high impact news, huh?
Order canceled.
I'm going to cancel the order. So let's go through it step by step. And I'm going to do this. I'm going to hide this chart. Everything starts on the large chart, Parker. And not just Parker, everyone else that didn't have the courage to ask. Haha. Parker, that wasn't an actual image that you posted. It's just, I don't know what it is. It won't let me open that. It won't let me. It may be a Discord thing. Hold on, guys. I'm going to jump out of Discord real quick and jump back in. It may be a Discord thing, Parker. So give me just 1 second. I think you guys can still hear me when I go to the great beyond. Let me open it back up. Nobody panic. I'm on my way. Getting close. Sometimes it just doesn't let me do what I want to do. So hold on 1 second. I'm on my way. Hopefully you guys can hear me. If you can't, well then I probably sound ridiculous talking to myself. And that's okay. Not the first time I've ever sounded ridiculous. I've got the picture, Parker. And I'm going to bring it up and we're going to talk about it. And you're going to get the answer that you need. Whoops. And you're going to be like, oh, that makes sense. All right. Can everybody see me? Can everybody hear me? Just want to make sure. Awesome. And how we're going to do this, guys. And Parker, I'm going to do this. And man, you guys think, when I say thank you for asking questions, oh my gosh, I mean thank you for asking questions. I always do. So Parker, large chart, small chart. There's always two. Large chart leads the way. So on the large chart, I'm going to look for momentum, and I'm going to look for a clear path. Small chart is my entry chart. Small chart is where I'm going to wait for the pullback to find an area inside a favorable large trigger. So when I look at the large chart, what do I have to do? Well, I have to make sure that I have momentum. There's that awesome picture that we took of momentum earlier. And momentum lasts from the point of separation until the trigger lines come back and re-enter the triggers. Are you good with that? Let me drop this one in the room. And Parker and everybody, guys, this is why I say, if you go back and look at pictures of strong triggers 25 times, you're never going to mess this one up. So let's go back to our chart. Do you see how there's separation between the small and the large? Everything is wide, everything is angled up. Are you comfortable with the idea that this is odds favorable momentum? Because you've got to be good with this one. Don't overthink it. If there's separation, Parker, we have momentum, brother. Why? Why would you be scared that it's going to cross? It's going to look like this every time there's a pullback. And let me show you. Hold on. Let me go back and we'll make it easier. So it looked like that. There you go. There's your momentum, Parker. This is what it looks like after it pulls back to support inside of favorable large triggers and continues. How kick-ass is that? So what we did is we just squashed a fear, didn't we? Because this is a large chart. I mean, they're going to move a little. Watch what happens if I take this little box. Oops. I love doing this for you guys. Watch this. And I draw that. We'll do it around this one with odds favorable and a clear path. Well, this market is ramping up so much. It's hard. That was news. But that's everything that happened inside of that one bar, Parker. So do you notice how on your small chart, you're like, oh, it looks crazy. But the large chart says odds favorable and clear path all day long. This is why we use two charts. Are you with me? Is that you're like, oh man, Mark, that makes sense. And this is what I want to know from everybody. And I think that it's awesome that you put that picture in there because this is common. Guys, people say, well, doesn't that mean that shit's changing? Pardon my French. Heck no. What that means is that we're getting that little pullback, that we're getting just enough in there to pull us back. Yeah, guys, I'm an HR nightmare. I apologize for that. So watch this too. Parker, if I put a box around the tail, the very bottom, is it just me or is that support inside of triggers? It didn't make it here and everyone was like, dang it. And then it made it here. And this was news and I don't trade into news. And sure enough, that momentum took it up. Guys, this is live freaking market. Sometimes you don't get your entry, but don't get all jacked up on this large chart. Like, don't freak out. It does, Rob, it's because people are jerks and people have opinions. And for every person that says, if it's a good news, I'll go up, there's just as many people that say, if it's good news, I'll go down. And it has nothing to do with anything. But these guys have a plan, and whoever has the most money wins. And I can't see bank accounts from where I sit. So I don't care. I make money up or down, right? If it's strong up, if it's a clear path. And then here we go. So Parker, you with me? Strong triggers, right? Don't worry about a little pinch. Clear path. The reversal bar signals the beginning of the pullback, and that's where I identify areas. So the reversal bar happens over here. And here we have weak triggers in a clear path and no areas inside of favorable large triggers. Do you see the difference? Strong triggers, there's your tail. It was a perfect entry, easy money all the way up. And if you got in at 20 and you didn't get out till 54, that's $340 worth of profit, Parker. So we learned to trust the large chart. We learned to believe in the large chart. And more importantly, we learned to believe that if our rules aren't met, it's cool to sit on our hands. Sometimes they'll come back for us. And that was news, guys. And news is a little erratic. But that's the gist of what we do every day, is we get just to this point where we let it be easy. And what happens, and I know I have a lot of new people, and guys, let me say too, because I'm noticing there's quite a few of you with green check marks next to your name, which means that you joined the family, right? You're part of us now. Yay! So congratulations, Parker and Morgan. I think I saw it on yours. And if I'm missing anybody, it's because you didn't post. Welcome to Nexgen, guys. I'm stoked. You just bought the Ferrari. Let's learn how to drive it. That's what we're doing. But keep it simple initially, guys. Keep it really focused on the best of the best. And what you're going to find is that there are a million opportunities. There's a million opportunities beyond it. But you've got to develop that trust. You've got to believe that weak triggers sucks in the beginning. No, dude, trade into every wall, Morgan. And as long as you post it in the room, we'll fix it together, I promise. Weak triggers create a problem. No areas inside of favorable large triggers creates a problem for the new user. And this is how I'm going to end my first hour, which is damn near the second hour, which is pretty cool because it means that you guys are keeping me busy. The key to everything, having success with Nexgen, having success, I think, with anything in life, is having a foundation, guys. Is creating a solid base, a solid platform to grow from. So for you new users, so you don't get your feelings hurt, I blanket you with very conservative rules, recognition of advantages, a solid plan that optimizes your chances of success as a new user as you learn to read your indicators. That's it. That's what the KISS plan is. I shackle you to simplicity. So for you brand new users, you're going to hear me say termination conditions are bad. Not some, all. Not having momentum is bad. Not sometimes, all the time. Why? Because you don't know how to handle this scenario with those weak honking triggers, right? You don't know what to wait for yet. You're not a chart reader. Not having areas inside of favorable large triggers, it's bad for the new user because I want it to be easy and I want you to find success because that's where confidence comes from. But just like anything, the more time you spend with it, the more you're going to see. And what you start finding out is that you can get away with trading in determination conditions sometimes. You don't have to. I choose not to because I can't seem to figure out for the life of me when it's okay and when it's not. So a clear path is safer for me. Weaker triggers, you may still find opportunities. Areas outside of favorable large triggers, you might wait for confirmation. You might say to yourself, I'll still take this trade, but the market's got to prove to me it's going in the direction I want it to go. So you've got to go through and you've got to keep it easy. And you're going to see guys in here taking trades that don't fit the rules. And it's not that they don't fit the rules, it's that they don't fit your rules. And your rules are your trades. Your rules belong to you. Your rules are how I'm going to hold you accountable. So if a trade doesn't fit the rules, it doesn't matter. That's their trade. If it doesn't fit your rules, well, then it just wasn't your trade. But if it does fit your rules, guys, you've got to be so in tune with this that you don't skip it, that you don't form opinions. And then, Parker, hands together, thank you one more time. If you see something that makes you question whether or not your rules are met, well, then it's your obligation to drop it in the room and give me the chance to give you a fantastic lesson to clear up the misunderstanding. I love this picture because how many people wonder the same thing? I loved Rob's question about the midband because how many people wonder the same thing? And guys, that's what makes this classroom work. It's that live feedback. It's getting that everything that you need. No, Parker, you've used up all your questions. Log out, go home. Yes, keep asking, man. Hey, Morgan, have a great day today, and I'll see you tomorrow. What's up, Parker? Talk to me. And guys, I want you to ask every question. Don't even ask permission. Just say, hey, let's talk about it. In the form of and pictures is always better, but guys, look at the weak triggers. You thought it was going up, you hoped it was going up, you wanted it to go up, but guess what? It's going down. Isn't that amazing? The whole box, Parker? Yep, let's go through it. These are my questions. These are the ones that make you brilliant. So we're going to start on the left and we're going to move to the right. Are you ready? And let's see how many lessons, Parker, we can get in one chart. Let's start all the way here. That's odds favorable momentum. And then, which lesson do we turn this into? So it is weak triggers, right? There's our first lesson, but it's also price reaches an area, triggers don't break, it's a term. So here's your first termination condition. Are you with me? Price retraces all the way up to resistance. Let's see if I can just copy that. Nope, it won't let me. So Parker, this is also a termination condition. Wouldn't you agree? So here's where we are so far. So right here, you end up with a clear path. Your triggers break everything. And man, we're going to write all over this thing. This is a clear path. A clear path doesn't guarantee that it's going to go down forever, right? I don't have the separation. I don't have the best. And then this divergence right here, when a negative number prints and that cyan line prints, this is divergence. This is a loss of momentum. Momentum, that's all. It's a loss of momentum. You don't even see it, Parker, until right about here. So you don't even know. Well, that's okay. I also said that a clear path doesn't guarantee that it goes down. Is it strong triggers? It's not, right? Because this is strong triggers. This is why I did this in the beginning. That's not strong triggers. The smalls are still buried inside. So even though it's a clear path, I don't really have the momentum to guarantee a shove. Check this out. That's the kind of momentum that shoves. This also had a clear path, Parker, but look at how the small triggers are inside. Do you see the difference? One just kept rifling to the upside. This one's dancing like a mofo. This is your first lesson in learning to trust odds favorable momentum. So it didn't have the momentum to push, and there were buyers there that wanted it to go back up, and that's it. And the buyers got it right up to resistance. And none of the triggers broke. And then I didn't have momentum either way, and it's hovering right at support, didn't break, and that's a termination condition. And I got a second higher divergence. But Parker, do you remember, and you may not because it's a lot of information coming after you. Let me use a different color. Do you remember when we said that 3 divergences in the same price range may terminate a trend? And 3 divergences in the same price range with weak triggers is more powerful, and that higher pivot is more powerful? This right now is telling you, Parker, just don't go short, man. Just don't go short. There's terminations everywhere. Don't go short. And this termination condition is saying, Parker, don't go long. Don't go short, don't go long. Parker, did you trade at all before you got to Nexgen? I didn't, so I always ask. Do you have any experience in the markets? Okay, cool. So you probably know, I didn't realize this was a thing until it happened to me 100 times, that when markets, let's do a different color here, that when markets consolidate and rattle around in between areas, it's a pretty easy way to take a full-blown ass kicking. Wouldn't you agree? That's a pretty solid way to make sure that you're separated from your money, getting caught in that chop and that consolidation, whatever you want to call it. You know what's amazing here, Parker, and everybody else, is rule 2 keeps you out of consolidation. Rule 1 helps. So if you were following rules, this is your 90%. This is your 90%. This is doing abso-freaking-lutely nothing because you can't find a statistical advantage. And what happened, Parker, is do you see how it looked like everything was going to break out to the downside? And everybody got excited. Everybody said, consolidation is over. We're breaking out. Yay, let's make money. But rule number 2, your large triggers never broke that divergence low, that bottom end of the range. And man, this is the fake out breakout. And this 50-50 trade either runs like a scalded dog for days or it fails instantly and runs your butt over. So rule number 2, and that's a lot of arrows. And it ended up going down. Okay, resistance ended up holding. But do you see how it doesn't cost you a penny to stay out of the chop if you're following rules? It doesn't cost you a penny. Is this today? I love rule 2, guys. It keeps me out of ranges. It keeps me from trading consolidation. Oh, you're playing replay? So let's go back. Weak triggers, resistance, resistance, and it breaks out. And I know that there's been a couple instances. This is a good one. Weak triggers to the mid-band to the large triggers, and it tries to go down, but the triggers never get strong. And you can see this fight. You can see them trying to figure out what's going to happen. And there may have been opportunities to make a little money in between it before the termination, before when you did have momentum. But I know that this was a good example, rule number 2. And there may have been opportunities to make money both directions inside of the range. They don't, Parker. They are a byproduct of the calculations. So there's another one. So when your software is running the calculation for divergence, what it's doing is it's comparing these MACD-BB lines with price and doing all these different ratios and stuff like that. These numbers are a byproduct, but they have no bearing on its effectiveness, its strength, its intensity, or anything like that. The way I had divergence taught to me, and it stuck because it was funny, is divergence is like pregnancy. It either is or it is not, right? Nobody's ever been a little pregnant. You either are or you aren't. And that's exactly what divergence is. It's either true or it's not. When you see a negative number flashing, the potential is there, but until that line prints, it's just potential. So it is or it is not. Yeah, so don't give it weight. And man, we love to do that. We love to add strength to things that we think are helpful. And we like to take strength from things that we think maybe are hurting us. And it's just easier to say, hey, I don't have any momentum. And even with a clear path up, I don't have anything going on that says go long yet. So I have to just be patient. You good with that? Did that help? I hope that helped. Because that's a perfect example, Parker, of where rule number 2 has the ability to keep you out of a lot of trouble. Where rule number 2 will keep you from going head first into areas that may hold. Where rule number 2 will help keep you from getting chunked up in a consolidating market. So you're so welcome. Keep them coming, man. Keep them coming. I'm going to go take a break, guys. I drink a lot of coffee and water, and you know what? I'm full. So I'll be back in about 4 or 5 minutes, maybe. And we're going to start looking at all the pictures that have been posted. We're going to revolve around advantages. Man, Gerard, I know that's frustrating. Ninja Trader 8 has a couple challenges associated with it. Let me show you real quick. from the software user guide. This is what I do. This is one of the ways to help keep NinjaTrader the absolute most stable. There's a NinjaTrader 8 best practices. Making sure that you're not clicking and dragging, that you're not drawing on your charts, but rather using that capture tool tends to help a lot. Making sure that your computer can handle the workload, not running a bunch of instances in the back, stuff like that. Making sure that you start with fresh data, avoiding corrupt data. Little things, and that'll help. And I know that it's frustrating. I know it's frustrating. I'll go weeks on end and never have a crash, and then I'll go a couple days where I seem to have a bunch, and I can't find a correlation between the two. We've had $500,000 in a fleet of software engineers that have cleared our DLLs, our codes, saying, and I had a guy on my laptop for 5 days straight, a programmer, and he tried everything he could to crash it, every scenario. My laptop was the guinea pig. And 5 days into it, running nonstop, 3 workspaces, every adjustment known to man, there was no rhyme or reason to it, and it appears to be a NinjaTrader 8 glitch. And I'm not throwing NinjaTrader 8 under the bus. I absolutely love the platform. I've been using it for years, but there are some best practices that'll help avoid that. So I apologize for any frustration that you're having, but I also say with a lot of confidence that Nexgen has done its due diligence, that John Novak has done his due diligence to eliminate errors from our side. So I'm going to take a break real quick, and when I get back, we are going to start looking at pictures, guys, and we're going to go through everything and talk about it. I'll leave you guys with the ES. And now, because we talked about it, dollars to donuts, my NinjaTrader 8 will decide to crash right in the middle. I hope not. I'll be back in just a minute, guys. All right, guys, I am back. And I got to tell you, what an awesome class this has been today because you guys have done such a good job of asking questions and getting discussions going. So thank you for that. I'm going to scroll up to the top of the chat box and we're going to start looking at the pictures that you guys have posted. Because this is an educational room, I'm going to revolve most everything around momentum, a clear path, and then we'll talk about your entry. My job isn't to judge you on your trades, whether you are a good person or a bad person. My job is to point out advantages and disadvantages. My job is to walk you through it. So Paul gets us going, and I've got a termination up top and I've got a termination below. And what I know without question is that this is a range-bound market. And then over here, I have a weak bottom. And Paul, you're trading directly into a termination condition from a weak bottom and directly back into the termination condition. You just didn't leave yourself much wiggle room, but large triggers rolled. I would have rather seen you come in maybe on this bar, but you come back and you get it, same price, good, risk is established. It's not a lot of room, but you said it's enough room to take the first profit, which I love. And then I would imagine at this point, you're break even saying, you know what, I made my money, I'm good, I've got nothing to lose. If all this momentum wants to take me up, let's run with it. And really well done. I was thinking you got in there, not there. But once I saw this, I love that. Beautiful trade, Paul. Nice execution. And then 50-50 trade coming from a good top. You do have divergence. And you said, you know what? With this level of momentum from a termination condition, I'll give it a shot. Hey guys, I want you to see something cool. Why do we let the large chart lead the way? Why do we let the large chart define? On your large chart, it's a 50-50. On your small chart, it looks like a termination condition. When you, like Paul does, recognize that the large chart leads the way, this doesn't scare you out of a nice short to make some money. So Paul W., great job. 2 trades, beautiful chart reads, great execution, making the world a better place. And then Morgan, whoops, and he had to go to work, but we're going to talk about it anyway, guys. This is a termination, a full reversal, odds favorable, everything says up, and a beautiful entry right at the area inside of favorable large triggers. Telling you guys right now, if you keep it easy, you're going to find these right from the get-go. Ron says when everything says down but smacks into a termination condition, couple divergences on the small chart, he does just a little snippet. Guys, taking advantage, going the other direction. And I'll tell you what, this looks like financial suicide, doesn't it? Odds favorable against, trading against the trend, everything. Once you learn to read charts, guys, once you begin to recognize patterns, you'll find opportunities to capitalize within those patterns. And then I put this one in just because I like it. The reason I love futures, guys, let's make money going up and let's make money going down. All you got to do is learn how to make your money. And then we get into class and we're teaching lessons and Miss Jen comes in and says, hey, Mark, check it out. That's a termination condition, and it reversed the market, and it gave me odds favorable momentum, and it pulled right back to a mid-band inside of the triggers, and I made money all the way to the termination condition. Welcome back, Jen. Does everybody see it? A pivot stop out is a termination condition. When it reverses the market, it's a strong top. When I get odds favorable momentum and a clear path, Rob, here's your lesson. Those large triggers are not a full bar away. Jen says, you know what? I got one line inside of triggers. I'm going to take it, but I'm going to put my stop beyond the correction point, and I'm going to hold that momentum right to trouble. Absolutely stunning. What a great trade. All you have to do, ladies and gentlemen, is steal her trade from the room. Go to your spreadsheet, and say, I want to do this like Jen does it. Rules met, don't hesitate. I say steal it. Nothing in this room is copyrighted. It's in my spreadsheet now. I love the advantage of momentum, guys. And once you learn how to trust that momentum, you'll be floored at what you can pull off. JW says, let's see what happens. Weekend triggers, it's pretty much just odds favorable. Pull back to resistance inside of the triggers. This is nothing more than a trend trade. JW, I'm so used to seeing you get in earlier. It's interesting just to see you get in later. Odds favorable momentum, clear path, pull back to the mid-band, easy money all the way down. Does everybody see it? If I were you, I would steal this picture too. I'm putting it in my client trades though. I'm not giving you guys credit anymore. I'm going to tuck JW in there because this is the perfect high probability trend trade. Kicking it old school. That's what we're going to call that one, JW. JW kicking it old school. Trading that plan that's been around for decades. And then Miss Jen again. That's a termination. And it's not odds favorable yet. And it's directly into a termination condition. And Jen says, that's not my trade. I don't have to hope the market goes up. I don't even have to hope it goes down. All I have to do is be patient and wait for the best of the best. My trade will come. And then Morgan. This is the one. And again, he's not in here. Maybe he'll watch the video. Guys, this is a clear path, strong trending, great push. And he tried to just jump in on it. And I can't see where you exited. I see the sell, but I don't see the other side of it. So if you held on with all that, that's scary. Maybe getting in right as we clear the area rather than jumping in way down at the bottom with weaker triggers, but low probability. Definitely a low probability trade. How we doing, guys? All I'm doing is going through and I'm talking about advantages. Yeah, one of your few trades. Sorry. And then Rob, when was what? The picture? This one? Looked like 8:42 a.m. That's what the timestamps say. I don't know if it was today or yesterday, though. All right, who's next? Trucking on through. Not a lot of pictures, like you guys were listening or something. All right, and Parker, we saw that one. Gave a good lesson on rule number 2. All right, Mr. Flowers. Since there's 4, I'm just going to click on all 4. And we'll go through and look. So, I like this because you've turned this into a different... Why do you hate to ask that? So, Kokeef, I haven't said your name the same way yet. When you downloaded the software, one of the things that it did is it gave you capture software. Oops, I don't know what I just opened. Keenan or Kenan? It's like you can enunciate in the room. I like Kokeef because it sounds cool. I'm going to keep calling you something different every time. It's more fun for me. No, Kenan, I got you, Kenan. So when you downloaded the software, right on, man, it's a laid back room, isn't it? In your search bar, type in TechSmith and see if that TechSmith capture shows up for you. And I'm not super computer savvy, so if you need help with that, let me know. And then if for some reason it doesn't, and I would be surprised if it didn't, but if for some reason it doesn't, here's the link to download it, Kenan. Knock that out. It's a 2-minute download. And then we'll go through and we'll do a little tutorial on it. Let me go through Mr. Flowers' pictures real quick. Did you see it when you typed it in? Did you have it? It looks like this. That's your icon that comes with it. But if you type it in, hold on one second. Bunk, bunk, bunk. There we go. Let me give you this screen. If I type in TechSmith, it should come up and give me that link. You see? Okay. So just download it real quick. And then we'll go through the full tutorial, man. We'll get you squared away right where you need to be. I'd say it every day that it's, in my opinion, the most important thing that you can do to learn the software is present those pictures and jump in. So I'm excited that you want to, and we'll knock it out and have some fun. All right, Mr. Flowers. So everything says down and it doesn't work, right? And it looks like you got multiple divergences off of it. And are you with me, Paul? You are. Guys, I want you to see a look here. I want you to recognize this look. So for the brand new user, for the hey, I'm brand new at this is odds favorable momentum. It is always 100% without a doubt, no question, separation between the small and large. Well, there is a moment in time where the smalls are accelerating, but maybe you don't have the odds favorable just yet. Not quite yet. You see this when areas are holding. You see this when termination conditions are working, stuff like that. And when the bars are to the left of those triggers, this is a strong push. And what Paul recognizes is off that strong push, I can sell a little pullback to those triggers. Typically, Paul, coming from a termination condition, it's going to be a higher probability scenario. But you 100% nailed it. 100% nailed it. And this is a trade that Nexgen has been teaching. This is from the 2004 plan. When those small triggers accelerate super fast, sell a pullback to them. And it typically lines up with a pullback right to the large triggers on the small chart. And you nailed it. And then when they did the same thing here, you did it again. Both directions. You made money both directions. Absolutely love both of those trades. They are higher probability from a good top or bottom. But a second higher divergence or a second lower divergence on your small chart, that odds favorable, it creates an advantage. And I think you absolutely nailed it both directions. Nice job. And then there's that acceleration again. They haven't broken through, but that's such a good look. And you take that little snapback with everything on the right side, and you just run. You run that momentum, but this time it's coming from a termination condition. Is it safe to say, Mr. Flowers, that you are a huge fan of momentum? Man, go have fun at Bike Week. Keep your shirt on. Amen. Your money's no good if you can't spend it. And then we get I like the short. You get out, and now you're saying, let's take the short here. Reset your target, stop, sell 2 ticks below the window of opportunity because of the support line at 03. You're a chicken, set your stop 2 ticks above entry point. So you just chummed the waters for him, huh? Paul, you just said, oh, everything, I've got that momentum, I've got that pullback. And look how it's right at the large triggers, right at the area. You just chickened out on it. I love that you put that you chickened out on it. Because you probably won't next time. And you did, and Parker, are you still in here? Do you see how this market is caught between areas? So what Paul did is rather than wait for the odds favorable, he took the immediate momentum, and you really did a great job capitalizing on it. And when you take that immediate momentum, Paul, it's got to be, quick in, quick out, capitalize, make that money, wait for the next best opportunity. So I think you're nailing it. And there it is again. The chicken's so nice we see it twice. Great trading, Paul. Momentum for the win. And then Erla's a big fan of momentum as well, and I love this. And I hate your stack charts, I'm not going to lie, but it's okay. Odds favorable momentum. And this is what I want you new users to see. So Malcolm and Parker and Drew and Jonathan and all you guys that are still pretty new to what we're doing here, I want you to see the momentum first and foremost. And I want you to say, holy crap, I love momentum. We won't even use that chart. And remember what I told you, that when you can identify momentum in a clear path, you'll find your entry. And this is Erla saying, with this momentum here, I'm willing to enter when I clear trouble, clear path. And why not get out at a fib? Resistance scares you. Good, that's a healthy fear. Resistance is 6'5", liquored up and angry about his girlfriend that just left him. It's okay. That's a beautiful exit. That's getting out where the market is likely to go. And from 85 to 14 is $290 worth of contract, or $290 per contract, which is, hold up, what is that? 580 in one trade. $580 in one trade. With the advantage of momentum, with the advantage of a clear path. What if Erla shut it down and that's all he did 5 days a week? Times 252 trading days. Erla, that's not right. If you did 580 times 252 trading days, how do you feel about that? Is there anybody in this room that would be opposed to making an extra $146,000 a year? Well, hold on. After the government takes their cut, is there anyone in the room that would be upset with an extra $27 a year? There's 252 trading days in a year, Paul. When you factor in holidays and stuff like that, and I'm sure it changes on leap years, but there's about 252 days a year that you can make money. And guys, here's a good lesson here. Okay, cool, then we'll go to it. Awesome. Having goals. Most people are trying to make $250 a contract. That's pretty standard, right? That 500 is about $126,000 a year. This is where you have to make a decision. And I'm going to tell you guys right now, one of the common things that seems to happen is people hit their goal. And the thing is most of you guys that are following rules hit your goal by 10:30 or 11 in the morning. Ron, who's no longer in the room, is a great example of that. And gosh, I want to live life like him. He follows his plan, he makes his money, and he goes to the beach, and he goes out and lives life. What happens a lot, and this is just a little trading stuff, guys, is, Erla, I don't know what your goal is, but if your goal is $500 a day, for example, this is where you shut down and go live life, guys, or you go to simulator, you go do something else. Anything but give the market an opportunity to take that away from you. Know what your goals are. Know what your reasons are. Know why you're doing what you're doing. George, let's see what you did. I know you're hesitant to annotate charts. But let's see what you've got here. Here's your entry at 52.98, 52.98. So we've got odds favorable momentum. We have an area that broke. You had a clear path. You take a perfect entry right at the areas of support. And you got in a little late. You waited for a reversal bar. That's okay. And everything is going up. And the only thing that I could say about this, George Val, and I don't know what your plan is, but the only thing that I could say about this, and let me know what you think about it. I'd love your feedback on my feedback. is that my initial stop is right where yours is, and I'm a big fan of that. But at this point, I'm up $712.50, it looks like. 712.50. And I am risking almost double that. Guys, remember that the goal is to get paid. And here I have weaker triggers. And maybe you're a big haul guy. You're a hold it forever kind of guy. And I've got divergence with weak triggers. And it gives me a little bounce. It would not be inappropriate, inappropriate, there it is, to have your stop behind this pivot. If you're looking to hold for bigger moves, it's okay to use the pivots on the smaller chart because it came, failed, and went. Yeah, it's totally appropriate. Lock in that money, right? Get paid, especially if you're using one of those things like Apex, because if for some reason these weak triggers push it all the way back and you get stopped out, your account's gone. That's it. What a great time to make money, right? What a great way to get paid. I'm a huge fan. I'll even get paid at trouble and make sure that I never lose money for the rest of the day. Beautiful trade though, George. Great trade. Momentum for the win. Should I have momentum when I'm trading? What do you think? I think absolutely. I think momentum is amazing. And I can't tell you how to manage your trades, but I can tell you that pivots on a small chart are a great place to put your stops behind. The same way on a large chart. All right, Malcolm. Good top, love it. Strong triggers, amen. Pulled back. Wish you would known. Man, Malcolm, I wish you would know too, because I would ask you every time what the market's going to do. But the reality is absolutely nobody knows, right? Nobody knows. Can I ask you, Malcolm, what got you in here? And not up closer to the midband, 2 ticks below the midband. Was that just the, oh my gosh, I hope it doesn't go without me? Fear of missing out, which is cool. It's normal. Because your large chart's beautiful. And it's screaming down. And it's such a perfect read. And I only ask, because this is one of those trades that freaks you out a little bit. Because they don't make it. And you're like, ugh. And they don't make it again. And you're like, yeah. And then right here, you're feeling pretty good about it. And just saw the trade and hopped in. Right on. I appreciate your honesty. And here's the other question that I'm going to ask you, Malcolm. Sorry. If you've got support, if your triggers are weakening, and you reach this area, is there anything wrong with getting paid there? There is nothing wrong with getting paid there. Absolutely nothing wrong with getting paid there. And that was, remember when Erla said resistance scares me? So he said, you know what? Let me get paid at resistance. And guys, this is such a lesson. We're in this to get paid, but what you have to be okay with, if you get out at an area, that could create a bounce, you have to be okay with whatever happens next. Because we never know. Because somebody stayed in going into resistance right here, Malcolm, and when they got stopped out right here, they said, shit, I wish I would have known that resistance was going to stop the market, right? And the person that got out at this resistance said, man, I wish I would have known it would have kept going, but they still got paid. And there's just times where it's going to smash through everything, or just get out. Or say to yourself, I've reached the area that might stop the market. I'll let a reversal bar take me out, right? So you still lock it in, but if it's really going to smash through and break, then it's going to smash through and break. You'll figure out what management works for you as you spend some time with the software. I can't tell you what to do. I can't ever tell you what to do. It's so illegal. But I can tell you that one of the options is, and let's see if we can find a live example. And we'll use the live example too to help Kenan here. So Kenan, I just shut down my TechSmith capture on accident. Are you ready for your lesson? And just a heads up, I get confused and sidetracked sometimes. And if I ever do, if you ever ask me a question and it seems like I just totally forgot about it, guys, there's a good chance that I did because I saw something shiny or got excited about something else. So it's not personal. Let's see if my TechSmith comes up. There it is. All right. It just happens. All right, so here's the deal. TechSmith capture, hit the big red button. If you hover over one chart, it's only going to get one chart. But Kenan, we're two chart traders, right? We need a big chart and a little chart. So I'm going to left click in the upper left-hand corner, and I'm going to drag that thing all the way down to the bottom right. And here's what's important to me, guys. First and foremost is that I can see your timestamps because I'm going to try to line this stuff up if you don't do it for me. And I also want to see your prices because I'm going to line this stuff up if you don't do it for me. So when I release the mouse, it's going to say, hey, Mark, let's capture an image. I'm going to say, all right, that seems like a great idea. And I do. And here's my image preview. And I'm going to show you two things here, and I did this on purpose. If you're saying, hey, Mark, was there an entry right here? Let's just say that's your question. Mark, was there an entry right here? I want you to see something. This particular bar isn't visible on my small chart. So if you're going to ask me about something historical, I want you to do this for me. I want you to grab this chart, and then I want you to say, hey, Mark, let me make sure that I show you both charts, and then come back and capture that image, big chart, little chart, release, smash that camera button, and then boom. Now we've got the information. Mark, this is where I entered, right? This is my trade. So this gets you to the basics, Kenan. This gets you to, here's my picture. There is an arrow button. I want you to embrace it. I want you to use it, right? Point out things that are important to you. There's a shape button. If you didn't circle it on the chart, you could have put that shape right there to give you an idea. But the most important thing that you guys can use is this call out button. These are all click and drag. I didn't say that. If I left click on my mouse and drag down, I can make that arrow as big, as small, any direction that I want. The same as with the box. Once I left click and start moving down, it's going to create that box, reverse it, down, up, all the goodness. And then this call out box. So I'm going to left click and I'm going to make a box big enough to put what I need in there. And I'm going to say this is a term. And I'm going to say Malcolm wishes he knew it would have reversed so he didn't hold into it, right? Absolutely, Malcolm. So what I did is there's two ways to do it. You can do it on NinjaTrader. Let me remove everything. So this pencil is your drawing tools. This is everything that you need. So if I take an ellipse and I circle the tail, it should show up on my 5-1. If it doesn't, you have to double click and make sure that it attaches to all charts. That's one way you can do it. But if I forget to do that, right, and I take my picture, well, then I can just take a shape and go, hey, look, this is the price and the entry point for me. And I have to draw two boxes because it won't transfer over. I prefer to not draw on NinjaTrader too much. And then the arrows, Mark, look, this is where I got in. And the shape, that's what I did. And hey, Mark, this is where I got out because there was divergence highs and lines and everything. Or maybe you got out up here, right? But then use that call out button, left click and drag down, and we'll just do a huge one. And this is the biggest thing. Tell me what you read, right? What was your chart read? When you entered that trade, I want you to talk to me about momentum because I want you thinking about momentum every time you take a trade. Even if it's not present, I want you thinking about it, because if the momentum isn't present, guess what? You may have to be a little more aggressive with your management. I want you talking about your clear path, right? Did you have room to your targets? Or if you took a chance because the path wasn't clear, that's okay. I want to make sure that you know that the path wasn't clear. So once again, you can manage a bit more aggressively. And I want you to talk about your entry, right? I want you to talk about the where and the why on the entry. And I want you to talk about the exit. And I want you to give me all this information. And why do I want that? Because when you know what you did, you can repeat the things that bring you success. Does that make sense, everybody? I can look at your charts. I can look at Nathan's chart, and I don't need Nathan to tell me that he just jumped in because everything was going down and he hoped that it would go up forever. And then even though he jumped in, he couldn't care less that divergence and everything printed and he held on too long and he gave back money that he shouldn't have. I can see this 100%. But I want Nathan to tell me why he did it, because I want Nathan to learn how to manage this better. And then if he identifies that we can do it, Nathan, we'll go back and talk to it. So, Jonathan, you're trying to post a pic. You have it saved and copied. So, are we still up here on Capture, Jonathan? So if I copy this picture, what I can do is I can come to the room and I can paste it in there. And here's the challenge. If you're in the pop out, you have to hit Control V to paste in the room. If you're not in the pop out, you can just paste it, right click and paste. Are you trying to copy it from right here, Jonathan, or are you trying to copy it from your computer? Because you can do it from the computer as well. So if I'm looking at a file on my computer that I've saved, I can right click and copy it and then come over to the room. And for me, I have to hit Control V and it'll paste it right in. So you've got to copy it from the computer. And then if you're in the pop out, you have to hit Control V to put it in there. If you're not in the pop out, you can right click and just hit that paste button like that, and it'll drop it right in the chat box. So the same place where you're typing in your messages is where you're going to drop your pictures. Give it a try for me. And then guys, once you're up here, copy puts it on your clipboard. You can drop that picture directly into the room. If you click upload, what upload does for you is it puts that picture in the cloud. Once that picture's in the cloud, it's saved forever, guys. It's there. But what we want to do with it is if I click copy again, and again, if you're in the pop-out, you have to hold down your control button, Jonathan, and hit V at the same time. That stumps a lot of people in the beginning. Control V will put that screencast link into the room, and now you guys can see everything that I did. And then with that screencast link, guys, I can open up my spreadsheet, and what I can do is I can paste it directly into my trade journal. And I can come back and check it out. And then for you advanced guys, if I have my link in here and I click insert and then the link button, it'll let me create a hyperlink. So I can paste the link back in like I'm going to Google. And under text to display, I can put test or great trade or whatever, and it gives me that shortened link that's easier to follow. And Jonathan, let me know if that works. And then Kenan, let me know if that helped. And then once you close it out, it's gone forever. You're looking for the next picture. And just do it 5 or 6 times, guys. Jonathan, you got it. Perfect. So Jonathan, you got the picture, but now what we need to do is we need to annotate, because what I see is going to be meaningless. What you see is going to be important. But let's annotate your picture up together, and I'll show you what I see. On your picture, I noticed that a termination reversed the market. I noticed that it gave me odds favorable momentum. And we were trading into a potential termination condition here, but here it had the potential to break. And that short little stint back, right to support, right at the large triggers, was your opportunity to get paid to the upside. That's what I see. And the thing is you could have said, you know what? I'm going to take an exit at the divergence high. And if you did, you would have been out of this trade about right here, and you still would have been pretty freaking happy. Or you might have said, I'm going to hold for the next area. And if you did, you got out up here and you were super happy. And then I believe that this was George's too. So my initial stop goes below this one. Great trade. And if I'm holding for that bigger target, my next one goes below this one. And if I'm going to hold again, my next stop goes below this one. Does that make sense, Jonathan? Everything starts on the large chart. That momentum, that good bottom, that sets you up for the best of the best. And then once you have those two very basic concepts, we're just going to hope that they give us an entry on the small chart. So your next step, are you using Capture, Jonathan? Are you using that Capture software? If you are, practice a little bit using arrows. Awesome. Practice using the arrows, practice using the shapes. And my promise to you, Jonathan, is that if you tell me why, I'll give you everything in my arsenal to either praise the heck out of you for a job well done, or do my best to help you get through and manage more effectively, to find a more effective entry, to find a lower risk entry. We'll identify advantages, we'll identify problems, everything, and we'll do it all together every time you post in the room. So great job. And now that I know you can post pictures, you're in trouble because I'm going to expect it. All right, Nathan, you ready, brother? I love that you wrote duh on your chart. This is what happens when you start getting good at reading your charts, Nathan. You're like, duh, why the hell did I do that? So let's talk about the good. Let's talk about the bad. And I'm going to mark it up because, we're in the home stretch. Jonathan, that's fair. That's fair. Just practice a little bit. Just pop a few in the room every now and then, even if there's nothing on it. The other day, to get some new people to do it, I said, man, take a picture of a puppy from your computer. I love puppies. Draw it on there. Let me know what you got. All right. So Nathan, your trade, the best trade. No, you didn't. You're a good student, Jonathan. You got this. Was right there. That was the best of the best. That was the one, man. That was your entry. That's where you had established risk. That's the winner. That's the one. Go, 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 especially in that strong push down. You cool with that? But we didn't get that one, right? So let's not pine over lost love. You say everything's going down. I've got a clear path. It's already bounced. I'm just going to get in. So I want you to do this. What kind of trade is this? I'll go back to it. So if you can't name it, Nathan, it might not be your trade. I'll go ahead and name it for you if you're cool with that. So these are your large triggers right here, right? And these are your small triggers. The triggers were not extremely weak. Your smalls were outside of the large. Everything was wide. Everything was angled down, and there was space between the two. What happened is you let the synthetics trip you up on that one a little bit. And guys, this is one of the things is remember that there are large triggers and synthetic triggers. Are you comfortable with identifying both on your chart in the moment, Nathan? Large triggers and synthetic triggers. Because this is an important lesson, and I'm not going to lie to you, this took me like 2 years to finally figure out. And I used to say, God, I used to go, "Ugh, my triggers are weak. Look, they're inside." And finally, one day, I said to myself, they're not inside of the large triggers, they're inside of the synthetic triggers. Does that make sense? I know, that's exactly what I said. I was like, wait a minute. And what does momentum look like? Oh, let's go back and let's make it remedial again. Because remedial is the only thing that saves my bacon. Is when the smalls are outside of the large, I've got momentum. So let's go back. So you're taking a momentum trade, Nathan. Are you good saying that? Because once you can identify it, it creates management expectations. So you have to be able to say to yourself, I'm hoping momentum carries this one into oblivion. And I think that's fair. That's exactly what I would be hoping too. With this down here, I'm like, man, come on, momentum, go, 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 go. But here's the deal, Nathan, and this is where you got a little jacked up. What is divergence? We don't even need the large chart anymore. Oh, that's okay, Jen. Have a great afternoon. So if divergence is a loss of momentum, and I'm relying, not relaying, relying on momentum to carry me, and my wife loves this, and this isn't the way it is, but I always mess with her because she's really smart. If so facto, and that's not what it is, and all you guys that are smart know that's not it. If so facto, I think that was Dumb and Dumber or something. If I lose momentum, I may want to exit my trade. So Nathan, there's a couple ways to look at this. One of the ways you could use that loss of momentum is you could say to yourself, if I get a reversal bar on the wrong side of the triggers, I'll exit the trade, in which case you didn't make very much on this trade. Or you may say, if divergence prints, I'll exit this trade. Or you may say, if my small triggers roll, whatever. But there's an awesome lesson here on the relationship of bars to the trigger lines. So when your bars are to the left side of those small triggers, that's the best of the best. That's the screaming down. When they begin to work inside of the small triggers, it's slowing down. And when they start getting to the wrong side, this is where we see deeper retracements. So if you're going to take that momentum trade, be aware. Watch your momentum. Momentum's what I'm watching. And what I do when I take them, and I'm not saying that my way is the right way, is that if I'm in right here, I don't go for big targets, which means honestly, I want about $100 kick, and that's it. And once I'm up $100, my stop is right on the other side of the small triggers. And I know that it's not a home run, but I know that momentum doesn't last forever. Momentum changes all through the day. So what I can do is I can capitalize in small snippets and not saying to myself, this is a home run trade. This is a home run trade. What I'm saying to myself is this is nothing more than momentum. And momentum dies, right? So momentum is good, it's good, it's good, and then it starts to die, and then you just get out. So, dude, it's a great trade, it's a great read. Everything about it I like. It makes me happy. But this is a good example too. If you were in this trade right here, right, there's your momentum. I think somebody took a momentum trade right here. Once we got to the wrong side, get paid. Maybe there's a trend trade to be had, right? Most momentum trades that fail, if it's going to keep going, turn into trend trades. And you're absolutely right. Base hits are money in the bank. And then let's go back to you, Jonathan, and let's look at your trade. And let's talk about how much could you have made? And let's also be a little realistic. Are you cool with a little realism? If you got in here, if you're following the KISS plan, you made $300 on the trade. That's not bad. If you exited at the trouble spot, which is right about here, you probably with 2 contracts still made somewhere right in that 300 range. If you exited up here, you added a couple hundred to it. If you waited for the fibs, I mean, this trade coming from, it's hard to see your chart. Let me blow it up real quick. So the trade originates at 98. This is 12. So 98 to 12 is 14 points. Every 4 points is $200. So we are 700-ish if you go from entry to the fib, Jonathan. You could build a career off of $700 a day, don't you think? I don't hold that long. Some people do. There's people that hold so much longer than I do. I'm a huge fan. I'll take it in small chunks. It doesn't mean that my way is the right way. It just means I'm kind of a sissy. On one contract, that was $700 worth. This number doesn't come from hoping and wishing, guys. This number comes from getting paid. And the S&P is just working its way up. And just because life is amazing, does anybody see what started this big run up? This is, and I told my brother the other day, and when you are a sibling, you get this. The beginning of this entire move up that started at 8:30 a.m. on May 14th came up, pulled back, came up, pulled back, came up, pulled back. Support holds the whole time, and then it goes to the next key level. It dances, and it goes up. And guys, the entire run today were those same buyers trying to get to this fib. They didn't make it, it pulled back and bounced. They didn't make it, it pulled back and bounced. They didn't make it, mid-band, didn't make it, didn't make it, didn't make it. Pulls all the way back to support, and that's what got it moving up. Why not stay in at the fib? Jonathan, that's going to be up to you, man. And I think I just gave a pretty good example. Then what you need, if you see fibs on your small chart and not on your large chart, Jonathan, you have to make sure, get with Cam or Jason and Tech. Make sure that tick replay is hit, because your small chart fibs should picture, they should come over to your large chart. Cam can help you get that done. So see how I've got a small chart fib here? It comes over to my large chart. So you have to ask yourself, Jonathan, and let me show you why I like getting paid at areas. I had odds favorable momentum directly into Fibonacci support, and support still stopped the market. I had odds favorable momentum directly into support, and support still stopped the market. And then support stopped the market again, and resistance stopped the market, and support stopped it, and support stopped it, and resistance stopped it, and support stopped it. So Jonathan, it's easy to say when you're sitting on the sidelines, why didn't that quarterback just stay in the pocket longer, right? But the reality is these termination conditions are going to stop the market more often than they don't. That's why they're part of our statistical advantage. So you have to make a decision. For me, 3 divergences in the same price range is a killer too. So, Jonathan, the more time that you get, no, all you gotta do is follow your rules, Rob. The more time, so let's do it this way. If I was at Fibonacci resistance and every one of my triggers were below it in week, would you take a long trade into that area, ladies and gentlemen? I want you to ask yourself this. If this were my large chart read, if my large chart read was weak triggers into resistance, Rob says he wouldn't go long. Why not, Rob? Because with this look on the triggers, because with this giant red line, this is an area that has the potential to stop the market, right? And guys, I want you to let me know if this makes sense. So it has nothing to do with the termination condition. For you, it's no momentum. For me, and call me crazy, if I don't have momentum and I don't have a clear path, guys, I'm not taking a long trade. Does that make sense, Jonathan? If I don't have momentum and I don't have a clear path, I'm not looking for a long trade. So by that little bit of, if there is no way on God's green earth you could get me to enter the market here, would it make sense to take profits rather than hope? But I'm linking them together here, Jonathan. So that's a termination condition, right? And if it's not good enough to make me think the market's going to blast through it, isn't this a great place to get paid? Does that make sense, everybody? If my indicators don't tell me this is an area that even has the potential to break, doesn't it make sense if I am in a long position to just take profits and wait? Because we know that there's going to be more trades. And this is how you have to think when you begin to work your management plan. If there is no way I would take a long trade here, I have to be okay if it breaks anyway. I have to be okay if the next one breaks anyway. But we trade a statistical advantage. We trade advantages, guys. And I'm going to come back to the bottom here. This is a good top. This is odds favorable momentum. Absolutely, Jonathan. This is odds favorable momentum directly into a fib. If I were short right here, well, let's go to this one. Would I be upset with $600 worth of profit into one-to-ones? I shouldn't be, right? I've reached an area. What a great place to take profits. Well, that one started to break, right? And I go into the next area and I'm thinking, man, with this much momentum, Jonathan, with this much momentum, with everything saying down, coming from a good top, does everybody see how this certainly does have the potential to break? I love this look, guys. And if I'm in a short trade and I'm up money and life is good and there's no harm that can come to me, and I see this much momentum into an area, well, maybe I'll say if I don't get a reversal bar on the small chart, I'm going to hold into this area. I'm going to hold into this area because with this much momentum, it certainly has the potential to break. Does that make sense, everybody? At least here I can say, man, I might take a shot at this bad boy. Take care, Paul. Great trading today, man. And then, guys, here is the next part of why I'm doing what I'm doing with you guys. That termination condition stopped the market cold, even with the momentum, right? Even with that odds favorable, with everything saying down, with the previous area just smashing through it. And I was in all the way up here, Jonathan. Doesn't it make sense to just get paid? Because we know, let's go back again. I'm a broken record, Jonathan. You're either going to love that or hate that about me. Resistance held, support held, resistance held, resistance created an untradeable bounce, support held, resistance held, support held, resistance held, resistance held again, resistance held, support held, support held, support held, resistance held, support held, son of a gun, resistance held, support held. So, and Jonathan, I had to take this lesson from my brother. And he said to me, and it's so funny because if you have siblings, you know how funny this is. He says, Mark, what the hell makes you think you're so damn special that these areas are going to break for you when the rules say that they're likely to hold? What makes you believe that you're going to be the exception to every rule and they're just going to smash through rather than do everything that they did 1,000 times before? And once you learn to believe that, well, then you start making money. So, Rob, let's go see what it looked like. I wasn't in this trade, guys. I don't even trade the ES. But this is my termination condition. If I thought I was going to hold that trade, I don't know, maybe I get out with a reversal bar. Maybe I don't even give it a full reversal bar. Maybe I get out with different. I don't know. There's a million ways to do it, Rob. But I'm telling you, if you didn't miss this short, you don't give a shit when you get here. Get paid. But if you just jumped into the market hoping it was going to smash through everything, well, then you probably lost money. So I'm not saying watch the triggers. What I'm saying, this whole lesson, 100%, was that if you reach a termination condition, it's okay to get paid at the termination condition. The thing that you're going to have trouble with, ladies and gentlemen, the problem that you are going to encounter is the idea that if you get paid at resistance with every trigger line below it, can we all agree that that's a freaking amazing place to take profits? Fibonacci resistance, every trigger line below it. Can we all agree that if I found a reason to get in down here, that is a logical spot to get paid? Especially as a brand new user. Isn't that a logical spot to get paid? Is there anyone that doesn't understand what I'm saying right now? We're working on management. We're not talking about trade entry. We're only talking about our one goal as a day trader, to get paid. And if I'm up $300, $200, $150 and I hit a big red fib and all my triggers are below, is it okay to exit the trade? Is it okay to exit right there? Absolutely it is. So here's what you guys are going to have to work through. When it does that, you're going to want to change your plan. When it does this, you're going to say, you know what? I'm never getting out at fibs again because that's stupid, because that one time it broke and I got paid. Take care, Kenan. But if you go back and you look at how many times these things hold, what you realize is that getting paid at them turns out to be a pretty good plan. And what you realize as well is that you are so stinking good at reading your charts that another trade is coming. So Rob, if you got out here, you probably got back in somewhere over here. And you just made more money. But you put it in the bank. And that goes back to what you posted. You were up $500. You were up $400. And instead of getting paid, you gave back $650. And we've all done it. And if you say you haven't done it, you're probably full of beans. You're probably telling stories. Um, so so guys, write it on a piece of paper. My job as a trader is to get paid. I get paid the easiest when I have a statistical advantage, meaning that I'm trading a pattern that has been proven to win more than it loses. I get paid more readily when I follow my plan, when I ditch fear, when I get rid of emotion, when I let everything be if then, when I stop worrying about what happens next. I follow my plan. And guys, I'm going to tell you right now, my plan says that if I get a second lower or higher divergence, I exit the trade. No matter what, if I get a second lower divergence, I exit the trade. And if it never gives me another up bar, that's cool. But what happens is I've got to follow my rules every time. I've got to make sure that my only goal in life is to follow rules. I don't know that there wasn't an actual entry, Jonathan. You didn't get it. If you exited here, the only trade that you might have had was maybe a little momentum something or other. There wasn't one. Hell yeah, they would. Your bank account would too, Rob. Have you watched Moneyball yet, Rob? Have you seen that? Watch it today. If you're bored today, go watch Moneyball. Um, and I say that, and it's an older